Welcome everybody. So SAP previously used to have this solution separately. So one complete isolated solution for statutory reporting, which they used to picture it as a periodic reporting, and separate box for e-invoice reporting. So later there was the way the government was changing, the regulations were changing, and it was all changing to converge the whole scenario of regulatory reporting. So government also wants a complete trace end to end from right from an invoice or a way bill till the reports have been submitted to the government. So that's where SAP decided that making these two products separate doesn't help, so that's where they came up with DRC as a naming convention, documenting and reporting compliance, and brought all these components together for the customer. So that was a small reason why they have made the name change of ACR to DRC. So henceforth, document and reporting compliance is the product that is called. So now I will share my screen. And also, since you were already been explained about the materials, I would like to say there are few materials which created which will help you in the journey, which you can also open side by side, is the training guide. So this guide is exclusively to walk you through step by step reasons and with steps with different end-to-end scenarios with steps of troubleshooting. So this will increase as we go in with different countries. But apart from PPTs, I would also like you to focus on this guide, because this will give you easy picture of all the fancy pictures that you see on slides. So here I've tried to create an end-to-end process. I have tried to explain it into a more granular and simple way. So that's where it would be good if you can refer this guide for your immediate reference or in the later point when you will be working in the product. So now starting with the first slide to set the stage, and why I wanted to set the stage up is actually the slide is little older. SAP may be sharing it with different forums, but the ask here is the whole regulatory reporting landscape is really changing. So earlier there were isolated countries which were running on statutory reporting. There were isolated countries which were running on electronic document. But now the more as we go forward, there is a more and more focus on having these two end-to-end scenarios very closely. Many places, like I can speak about India, where you see the GST reporting, GSTR1 now is completely end-to-end, from GSTR1 reporting, GSTR3B, all in the system, all invoices sent to the government in the periodic basis, and at the end, while filing, all these invoices are being tracked from the government itself. They prepare a draft and they send back, which the statutory report submits. So more and more such scenarios are coming across the globe, whether it's Spain, Europe, or US sales and use tax. All kinds of scenarios are really converging now to more integrated use of both statutory reporting and electronic documents. So this is the picture. It's rapidly changing. So message here is that different countries are on the different stages of the digitizing journey, right? So, and slowly and gradually everybody is moving towards draft reporting, where they need these invoices, these accounting document from the corporation or the corporates. They have all the details, and then they give back to the corporate the draft report that you just need to see, acknowledge, and submit. So all in all, the whole regulation bucket has converged. So that's the message here. So when you look at the product, do not look it into one angle, that just you have to implement electronic documents, and statutory reporting can be done by maybe later stage or with a different software, or maybe it is not a focus right now. Sooner or the later, you will have to uh, be in this complete picture with you, as you already have purchase the product. It would be really good if you could utilize end to end this whole product, which will be anyway a cost and benefit for you as well. So pause. Any questions? No, then I go to the next slide here. So this again explains how the whole compliance journey worldwide have been progressed. Right? The different stages. I talked about that every country is in a different stage of digitization journey. Surely and shortly, this is affecting every country. Some countries are way ahead in their journey. Some countries are just starting, but we all have seen this paradigm, at least in this group who have been 10 years, 12 years more experience. We have seen we started with submitting our personal ITRs or tax thing on mails, on portals, uploading it onto the portals. So it started with a paper-based return. Then online form was a big thing for us at that moment. And government also started going one step further when they want e-filing to be done. So where e-filing is submitted to the portal, and it was more machine to machine. They have some XML formats, you upload it in your machine, fill these details, again submit it back. Then again, this was also at some point not sufficient for them. So then they started going into this auditing journey where everything as an aggregated data, they used to have it first. So all the level of details, individual transactions, and all the informations were submitted to them periodically. Waybill kind of scenario, different type of periodic details, audit things that the government needed, at least for auditing on a different purpose. Now, how e-invoices has come, and so the e-invoices added a total new dimension. Then it gave a platform to exchange the documents between the business and the government. You can take a role of a business and business partner buying or selling products. So everything that they do with their customer, government also should know what exactly were the invoices which were provided to their customers. So a complete digital trail was there with them. But again, can you just imagine with this also, why didn't the government stop? Like they had the copy of the details that is going to the customer, they have the invoices, but again, something made them think of e-accounting or e-verify in the next level. Okay, so they were not able to connect between the audit trails and the e-invoices. So they wanted to have that connection directly with the data. So yes, the invoices were sent, but they could not backtrack any audited. That is it coming from this one particular source system? What was the source document for it? And how they can verify whether they originated with a proper trace in the system. So that again led to e-accounting. So the connection was introduced as e-accounting in a near real-time scenario where a copy of e-document was sent to the tax authorities directly from the system, and they used to have a digital copy of each transactions as well, so they can easily verify while doing an e-audit from where exactly the transaction existed in your system. Then, not to add, again, they were not satisfied there also. So they again introduced a process of e-clearance and e-distribution where in the near real time, the company now has to send electronic document to the tax authorities. They now will have a verification, and then they will further send it to the customers that you want to send. So these kind of scenarios are between different countries, and we'll walk them through as we proceed. So now if you ask me a country that really does any verification and sends it, which is that country, you can easily identify it. It's South Korea. So in Korea, you would see there are multiple layers involved. It's not directly B2C invoicing or B2G invoicing. There are multiple application server providers in between who will receive the data, who will make the data into the government format, and then the government themselves will verify if the data is correct, and then they will pass it on to the customers. So till that level, then the message here is till that level, the transactions are being tracked, the transaction are being checked, moved across different systems. You may have come with these scenarios in the past. So just to sum up, so irrespective of the stages individual country is. So there was a dire need of a global solution which should be able to cover all these variants. And as you see, the trend is more clear, right? As I said, that the government is moving towards a draft return. So a conglomerate doesn't have to do anything. Just they would be sending the data as per from their system. The government itself will prepare a draft of returns for them, send it. They just need to verify. That's it. And if something goes wrong, they need to go back, check, and again send the proper data to the government. So till that level, the whole scenario of reporting is.
I think to some extent E-Verify is still happening, isn't it? Like when we talk about like India filing, like for individuals, like direct tax filing, I think our Form 60, when we get the Form 60, when we actually file a return in India in July, at that particular point of time, half of the return is already filled by the portal. We just verify. We can update it update it obviously, but I think a lot of that particular portion is already happening, at least in India for the E-Verify scenario.
Correct, because they have PAN and they have all the details tracked through PAN. So any details, anything that goes from our permanent account number, it's tracked, known to the government, and they have full transparency. So it's easy to track it. It's easy for them to track it through PAN for individual taxpayers, for conglomerates, like the Amazons of the world. They even track each way bill that they send before the item is moved out of their warehouse. Individual invoices. Imagine individual invoices would go to the government. So that's the level of digitization we are talking about.
Oh, that's great. I mean, India is on the last level of automation, so great to hear that.
Yeah, because just now I think the product had GST enablement. I think now there is a complete draft reporting reconciliation which is called as GSTR1, GSTR3B reporting, which went live. So now reconciliation requirements are more, where the drafts in by government as a short summary needs to be verified from the data from your system as a long summary, and only when it matches you are supposed to send the signed version to the government. So more complex, more scalable solutions. And to be honest, DRC is built in the way which can be scaled up quite easily for any kind of scenarios. And that's where it was able to identify this well ahead in time, and it's getting more and more adopted to such scenarios of Spain, where again the draft reports are getting into the legislation. Spain are much more lenient. They trust whatever the corporation sends to them. They don't question back. But yeah, every country is different. So I'm not selling the product, but now you have taken the product, so I'm telling the benefits, how even a complex of the complex scenario you can do it in
just
DRC.
Tell me one thing, Advait. I have this particular one scenario. Let's say we acquired a company and they have their own homegrown ERP. Okay, for whatever reason, we have not integrated that particular. We haven't gone with the system integration. We don't have that particular their accounting system integrated to SAP. So, but if we are basically falling under that particular compliance regime, like if let's say we acquired a company for Belgium, we need to be compliant for e-invoicing, correct? So can we utilize DRC to connect to a separate third-party ERP, or this solution only works with SAP?
This solution is only designed for SAP S/4HANA. So the source of truth should be SAP S/4HANA. External integration or external data integration is very, very little and very little scope. Again, I would not say not possible, because anything is possible in this world. They can have different workarounds, but the solution is meant to run on S/4HANA when the source actually is S/4HANA. So
in both the names, statutory reporting and e-invoicing, both.
Yes, both of the solutions.
Both the solutions. So
yes.
So the source has to be SAP. There is no other way around.
Correct.
Okay. Good to hear that.
You can still do extension on. You can still extend, but again, it will take an effort of building a new project itself. right? So you will have to build your CDSs, you will have to define your data sources, you have to have a complete
too much
testing.
finagling. Too much finagling has to be done.
Exactly.
So yeah, good information for. So I mean, if any use case comes up, at least we know what are
Yes.
limitations.
And that's how they are projecting it. That's why it's kind of an add-on which is there on S4 HANA. Yet it has different licensing. I will come to the licensing part since you all are leaders who would be involved in licensing and costing decisions. It will soon come up because SAP is very tricky in licensing. Whatever seems easy, they they charge you on a different level, and which many customers would not be even aware of, and later they find out that they should have known that before, how to best optimize their licensing scenario. So I'll talk about that as well, because you will be using for your own. So definitely the cost centers or the whole charging thing will come to you for approval or for your budgeting purpose. So I'll come to that. There is a space for how licensing works. So both on-premise and S4 HANA, they have a complete different licensing mechanism and on a very confusing level. So I'll talk about it a little later. But now let's see the complete end-to-end process, at least from, this is not from statutory reporting purpose, this is from the purpose of how documents are sent. That same story of draft returns is picturized in this slide. It's more from what all directions the data goes to the authorities and to the customer. The whole story that I talked about, now you can picturize it in this slide. So it's kind of a slide which will give you a picture of where the solution sits. So the solution, anyway, the source of truth, as I said, is SAP S4 HANA. ERP ECC is supported to some extent on traditional reports, not all, but majority of them is on S4 HANA. So the whole scenario where you have e-accounting. So this is the very simplest of the scenario where you continue to send invoices to your customer without any extra steps. But the same data needs to be sent to the tax authorities also. Like I talked about a scenario of Spain, where a Spain trusts the source. Okay, whatever you are sending, I accept it. You have sent it to your customer. I have a copy for myself. They're happy. So e-counting scenarios, then e-clearance scenario, you continue to send invoices to your customer, but you first need to verify with the tax authorities that register it. So the return would have some unique number or stamps. Only once approved, it's a valid invoice that can be sent to customers. Many of the countries have this kind of scenarios. I know about Mexico as one who is very stringent in such e-clearance process. Italy is also quite near, but Italy is more of a e-distribution also, where the government itself distributes it. So again, coming to the e-distribution scenario, so once registered, the tax authorities themselves forward the invoices directly to the customer. So this is a typical Italy scenario here. And statutory reporting. So again, the statutory reporting is kind of a periodic report on document level, box level, whichever you want to generate. Always it is submitted over a period of time. So SAFTIs are the typical kind of report, I would say, which has tested the statutory reporting framework to a great extent. Other VAT reports, withholding reports, all these are a very less of a data intrinsic, more periodic. You schedule it, send it, box level reporting, smaller values. But coming to the softy kind of scenarios, which maybe to my knowledge at no framework would be able to handle, especially the preview part of it. The files generated in, I would say, Romanian softy is 23 or 25 GB of the file, because they track every transaction, all the accounting documents, all the postings, everything they would need for their reporting. So you just imagine the amount of level of the reporting that would, or the level of data that would go. And it is not only reporting, you want to also see the data, right? Whichever data is going to the government, you want to have a look. No tool was able to open at least 23 GB of data, as you already use preview or you already use statutory reporting. So people would know there is a preview functionality, which before sending, you see the files in a user friendly format. Especially, I think who are involved in the statutory reporting part would know that. And that's where I'm just talking about that not just sending the data is important to the government, it's also the scalability part of it. So you would have a safety kind of scenario where after sending the data, you need to file it for the government. And these things you should make sure that whatever works for one country at the moment should also work for almost all the countries with different challenges. So as a leader, you should not focus on the short-term solutions for country-wise. Otherwise, you'll end up in spending more. So this is one thing at this moment, at least to complete the complete story.
Advay, I have one question. Like
Yes.
the statutory reporting point of view, when you are currently what we are doing, we are downloading and uploading IRS website example. Can we automate the process like in the DRC?
Yes, there is. It depends. It depends which country. So there are few countries like Brazil or few countries like UK who accepts electronic submission. So electronic submission is the document directly goes to their portal and it gets automatically submitted. So there, the countries which accepts electronic submission, you don't have to manually do anything. Just generate the report, schedule it. It will automatically send the report, give you the status. But for the countries where we have manual submission, like I think there are different countries still where you would need to generate the report in your system and then take the Excel or JSON and then upload it in their portal. So for them, definitely that manual part would be needed due to different reason, because in India, in between, there was a third party, e-portal or e-seva, who used to have these files. They themselves were authorized to put those details on the government side. So mostly manual uploads or manual submission of the report, directly automation is not possible, but electronically, if government accepts, that is there. That is automatically there.
So one more clarification on the e-clearance. Can you elaborate a little more what exactly the e-clearance here?
Okay. So what in I'll elaborate. So e-clearance. So what it does is, so the government or the company would send invoices to the customers, right? But before they send it to the customer, there is a government in between who wants to, or the tax authorities who wants to first get those invoices. They register, they verify it, they verify all the details, transactional level details, and then they verify and they generate a unique number or a stamp. Only once that is approved from them, then the invoice can be sent to the customers. So they are a guardrail in between. They provide the clearance if the particular invoices can go to a particular customer or not, it is from the perfect format or stuffs like that.
The same thing from the vendor supplier side also?
Yes, any vendor sending it to you will also have to go through the same process. It would be verified, then only you need to pull it from different portals, or then it will come to your system and then the subsequent document would be generated.
Okay, thank you.
Just one thing, from a reporting perspective, at least in Moody's, we use Vertex as a solution for all taxation. I know that the data basically, we send the data to Vertex. Vertex basically calculates and sends it back to SAP. But in this particular scenario where we use Vertex, would we still be able to leverage the reports that is available in DRC?
So to that point, Vinit, what I can say is Vertex as a partner is tied up with SAP, especially for US. So there is a special scenario which I know, US sales and use tax. So in US sales and use tax, there are various states that have different laws, different reports, and a different kind of reporting each, I would say, area or a state. So Vertex, what it has done, that they are the experts in reporting. They have created those reports specialized for these all US countries and different taxations, whatever they calculate. Now there is an integration which exists between statutory reporting and Vertex. So utilizing that integration, so they call it as integration scenario, where if you tie up to Vertex, let's say Vertex, we are using your solution, you have an integration with SAP or a partnership with SAP, where I want to use statutory report for generation. So for you, the interface will be exactly same, like you will be having the same interface. The report will be generated in Vertex, would be seen in statutory reports. The whole flow will go from statutory report. You won't even realize that the whole report or the generation or things have happened in through Vertex. So yes, there is a possibility with limited scenario. At least I know about US sales and use tax. I don't know about other country reporting tie-ups, but Vertex can be used through SAP partnership.
Okay, perfect. But in our scenario, like we use Vertex globally, like for all countries. Like we have Vertex as a global solution. So do good to know, like if we use Vertex for GST, how that basically pans out. Again, we'll keep that as a parking lot item, and if time permits, we can basically discuss it on last day. I don't want to derail it, but yeah, I mean, but if time permits, I would just want to quickly explore that particular scenario. What are our options if we basically followed that particular path?
Sure, Vinit. I'll try to get info on that at least.
Yeah. I mean, if you want us to share a screen and show you the scenarios, like how the setups are there and how, like if you need any details, just don't hesitate. Feel free to ask us those particular questions, and we'll be able to do the detail.
Okay. Now moving ahead. Again, I talked about a problem statement from the sender perspective, or how you different mechanism for sending, what was the challenge, how the regulations are evolving. But now as a, I would say, customer and an end user, so you yourself, if I keep into Moody's shoes, so for you, the biggest challenge would be that you still would have to have multiple representation of the same information, right? So all needs to be kept in sync, whether it's the sale document, accounting document, all documents, e-documents which are sent to the government. I need to send a copy. How does it relate to the um, documents created in my system? So I'll just start with a sale document example. So it triggers the creation of the accounting document, right? Just for the respective process, how the earlier the sales or accounting document is currently, like for us, it's used as a source document. Now, first we need to create, if at all, forget about the solution. So if at all the government needs an representation of e-document, what we would need is we need to first keep it into an exchangeable format, whatever the government needs it, either in XML or JSON. And this would be, again, the source of truth for the authorities. These documents, they will create, receive, process, store on their side. So then when these documents are transmitted, right, either near real time or real time, so all the track, if we don't have the solution, needs to be done independently for all the countries. So many common processes would have to be repeated once again, right? So that is one of the major challenges that any company without this product would face. So I'm not sure it's the same since, okay, e-document is not, you are not using Vertex for e-document, right? At the moment?
No.
Okay.
And we are not planning to.
Okay.
We want to pivot to DRC only, unless there's like unless we hit like a sort of some major roadblock. We plan to use SAP DRC as our one global solution for all e-invoicing and statutory reporting solution. E-invoicing now, statutory reporting later.
Got it. So again, talking about the same example where we have the same representation of different data, this is a framework. Means the whole DRC is a framework. It's not very transactional, or I would say, since we have experts from SD here, we are very used to this transactional data which generates from the system. But to differentiate between that, I would coin a term that DRC is a framework. So in a framework, you have certain set of reusable components, reusable things, which will help you define a process which can be used across multiple countries in a uniform or harmonic way. So this is what the solution is, if I try to put in a very easy way. So it is globally harmonized. Again, it do not compromise on any of the compliant or the compliance side of it. Every country would have its own compliance story there. So this slide would give you a complete picture why the solution is needed, or what without this solution, how it would have been worked. If somebody would have told you to send e-invoice to the government, just keeping in mind the SD billing document, what would you have done for each country? So separately, or how would you have done it? Imagine that process. And when we talk about, or when we see this in the framework, you will be able to connect the dots on how easy the framework has made it for an end user. Okay, so this is the slide which would again give you a sneak peek of different apps. Now you will be able to visualize on the app level how the solution would work. I can also show it in the system, since we have done a lot of talking. I know talking is really boring, and visualizing is also a bit difficult without seeing in the system. But I'll
Coffee
just
helps there, Advay. If you talk more, just drink like a cup of coffee.
For me, it's a time where if I don't talk, then it would be difficult. Otherwise, I'll do so. So yeah, just on this slide a little bit, and then little bit on system. Then we'll have a small break, at least to digest the overview of the solutions. So how it has gone. Okay. So now I have spoken about the end-to-end solutions. We talked about bit in statutory reports, bit in e-document, and now we'll see the whole solution coming together to solve an end-to-end compliance journey. So now it's kind of a heterogeneous setup. So certain organization, let's say, if you see the left part, electronic document creation. So this is more of a continuous process. So here you would need, as soon as a source document is created, an electronic document should create, and then it should be sent to the government. So more of a very near real-time process. So they have, who would be the typical persona? Normally we talk about the persona of the who will be using it day in and day out. It would be tax accountant, it would be billing clerk. That's how the role is also been designed. I'll come to the roles and authorizations in the later part in this slide. But the tax accountant, the GL tax accountants, all who are involved in this process would need this electronic document app to daily monitor, to trigger, to see, or to make sure that the whole electronic document compliance is met. So that's the persona for electronic document here. Now, there would be again a central place for CFOs who would like to see on the complete global level the compliance story. So what is my compliance story across complete organization? So I need that view. Where my electronic documents are read, where my statutory reports are read, which deadline is appearing, which is endangered. So there is where document and reporting dashboard, it's a Fury app that has been given, which integrates to e-document, which integrates to statutory reporting, comes into picture. So it's kind of a SAC app earlier. Now it's Fury backend, it's connected to SAC. So here it brings the data from all the sources, and then it shows a global view of the whole compliance thing, and it's a drill down. So you click and it goes to that particular area. So anybody aware of this?
No, we have only looked at e-cockpit. We haven't looked at a DRC reporting dashboard. So earlier there was a session that we had with the Korea team, our Korea business team. One of the questions that basically came from them is, let's say we generated the invoice, correct? Now that particular invoice, we are saying it, we basically pull up in an e-document cockpit through the batch process, like a background process. How do we know that it pulled up all the documents? If is there a reconciliation report that a DRC generates where we can basically see that what are the documents which basically got pulled in DRC? And second thing is, for whatever reason, could there be a scenario where a document didn't get pulled over because of some error in the in creation of the e-document, and then where we can basically do error handling for those particular scenarios?
Okay. To answer your question, yes. So there are BT. It's not a batch process or such. There is a concept of BT, business transaction enablement. So there is a setting. If you enable it, let's say for your invoice, there is it's there in the steps in the subsequent document. So if we enable FIBO1, the transaction is there. So if you enable it in the system, that means all the documents that would be part of the triggering, like you create an invoice, and if it is not blocked, if it is a proper invoice, like there is no step which is stuck, normally don't pick the invoice which are blocked, which are in error state, or few scenarios. If it is a proper invoice, it will be definitely picked. So that's because of the business transaction event in SAP that makes sure that this process happens. So if you want to track down which all invoices are not picked, we need to go and check which are invoices. It happened when I was doing a scenario in the test system. So there is where the invoices were getting blocked due to various settings. I was not able to generate a proper invoice, and that's where it was not reflecting in the system, in the e-document cockpit. So to answer that, yes, but there is not any reconciliation or a separate app which will tell you that particular invoices does not appear. We need to just check the status in the system. If invoice is created successfully, BTs are activated for invoice, then it should automatically come in e-document cockpit.
Okay, so there would not be any scenario where, like, if I look at the happy path, the invoice got generated successfully, accounting, everything is done. So it is fair to assume that if everything is good, the e-document will get automatically created. There would not be a scenario where e-document will not get created.
100%. That will not happen, and that's always mentioned everywhere when SAP has mentioned, and this all tested. So there will not be any scenario which this will happen until unless an invoice is blocked or some error or some flow.
See, technically, I think we all agree, but I think business user required a level of convincing because they were like, I mean, when you talk about when you talk to accountants and tax consultants, they'll always talk about reconciliation and everything. So they'll say that how you're absolutely sure, unless you have not prepared a reconciliation, how do you know that all documents basically got transferred over from SAP to e-document? So yeah, that question did came in, and I think SAP also said that there is no report available.
Yeah. So, but with confidence, at least with the level of customers it has. So e-document is having more than, I think, some 5,000-6,000 live customers already. I'm talking about public cloud. So OP, we have huge number of list who uses e-document. So that's why you can confidently say that this is being used with many of the customers in their live production environment day in and day out. It's an old solution. So okay, and yeah, so then
just one quick pointer based on what you said. This is, I'm assuming DRC is a cloud-based solution, right? Correct? It seems a public cloud.
It has both flavors, and I'll come to that and just little later in this slide. It has three flavors basically: ECC, public private cloud, that we call it as OP or private cloud, and the cloud solution, and also it works with central finance. So there are different aspects. So Nestle just went live with central finance part of it. So there's also one flavor where you have a central finance box in between, and all these things also goes through the central finance system. So public cloud, OP,
that could be a good solution, correct? Like, let's say, just coming back to my old question there, like, let's say if you have a third-party ERP, so which is not in SAP, if we basically pull up their documents to CFIN, and then from CFIN we can pull we can still use DRC from CFIN.
Yes, means practically possible. Anyway, you need to have that footprint in SAP.
From day one I was talking to, when Dan was there, since we have so much data, we can have a separate box for each region. Everything's flowed down to central finance. From central finance, you can do reporting, like DR solution.
Yeah, I think
the kind of data we have, we
connecting.
need that actually. So
yeah, I think I'm just thinking from the solution that you remember those particular conversations that we're having with Rich, where they are saying that they would, like, at least the Latin American audience, they are thinking of putting up a local ERP, Microsoft Dynamics or others. So like for Mexico and Brazil, if they basically went to that particular level, we can basically, then we will not have that choice. Like, at least from consolidated reporting perspective for MCO, we can basically implement CFIN, and then we pull that data to CFIN, but still use DRC solution for our compliance reporting.
Correct. Yeah.
So this is the whole flow that I've prepared.
I think the question what Krishna was asking was, does the DRC solution itself provide a cloud or on-prem solution? I mean, this is
so because right. The whole point is right now the Moody's HANA solution is an HEC one, right? It's on the HANA Enterprise Cloud. So the data is stored in HEC, and the DRC itself is a separate solution. How do the two integrate? Based on what you said, they're almost replicating all the transactions.
It's not a separate solution. A HEC is a private cloud.
Right, in the sense that it is a separate solution, in the sense that it doesn't sit on your S/4HANA, right? It has to have a separate infrastructure, right?
I think it is sitting in BTP, right? Is the DR solution itself is sitting in?
No. I think there is a confusion.
Okay, can you elaborate on that? Yeah, where actually DRC, where does it sit from a landscape point of view?
I'll come to that. We were just talking about central finance, so I just showed the slide. So if you go to my training guide, right, just to answer so that we are into the conversation. So I'll show you the whole solution.
So while I'm looking up, actually another thought, go ahead, I'll let you do it. Fine.
Yeah. So here, if you see the first part, right, is all in S/4HANA. So all the core part of it is in S/4HANA, your normal process. And then I'll scroll down. And then as soon as you try to send something, like for example, you want to send the files to the government, there is where any third thing comes into picture. So in cloud BTP, there are two options. One is for CPI earlier, that is called cloud integration now. So there are CPIs, there is DRC cloud service. So there are two parts where you can utilize two. I think this would be appropriate for you to visualize.
So separate that out, let's split it before you hit the PayPal network. Does DRC have to store a document in any form, like a E-Invoice or anything like that?
Yes, it will. It will store. It's all in S/4HANA. It's all in S/4HANA tables. It will have its own persistency. EDO is the starting of the tables where all these e-documents will be stored. So there will be a separate e-document which will be created, which would be seen in e-document cockpit. All this will happen in S/4HANA in your HEC environment, private cloud, and in S4. Yes. All in your persistency. You can see the first box, right? S/4HANA, ERP, ECC. So in ERP, all the processes, your finance process, building, whatever you trigger an electronic document with, electronic document framework would sit in S/4HANA.
In HEC itself.
Yes, okay. Yes. Okay. In your private cloud.
The next one?
The next part would be when you transfer, when you send something, like say to the agencies or to the customer. Every country will have its own requirement there. For example, Belgium will have a PayPal. Belgium is a PayPal country. They would go through. Okay. So they would go through the whole PayPal setup that they would need to send it. So there are two flavors in business technology platform. Here is where you will hit BTP for two services which you will need. So for example, Belgium is a straightforward PayPal scenario. Then you need to go through SAP DRC Cloud Edition. So this is called SAP DRCC. There is a pre-configured PayPal network. Everything is configured here as a service. So this is a SaaS solution. Straightforward. Just connect it. All the pre-built things are mentioned here. All the flow is mentioned. Just need to connect, do the network settings, and then do the trust settings. done. So they will take care of sending it to PayPal, then receiving the response, updating it into the source. Everything will be done here. Scenarios like Korea is not a very straightforward scenario. So again, for Korea, there are, I would say, application service providers in between, ASPs. So these ASPs are a bridge between our network and format that the government needs, because of lot of translation things, lot of they go with a business transaction metrics which is very different from the other countries. So you need an ASP in between. If you're aware of BTP concepts, there are something called iFlows. So here the custom iFlows are created in the SAP integration suite, which would allow them to transfer it to the application server provider in the format that they need, and then they will take it further to the national agencies, NTP or something for Korea. So again, the complexity is more there, and that's where these two solutions will come into picture as per your need. But to answer your question, yes, everything will happen in S4 for the transaction level till the e-document is created. For sending, we will have BTP layer in between, again 2 flavors or 2 services in BTP depending upon your need, and then that will act as an intermediate between the tax authorities and your main core system.
So a quick question, on the BTP integration suite and the DRC cloud, is there option to choose the one-all services?
So you have options. Specific? It's a subscription-based model.
In the case of Korea, I see that there is integration content they do from CPI. Basically, S4 sends the e-document and CPI flow will come to the smart bill. They send the document to smart bill.
ASP is smart bill.
In Korea, yes. So in Korea, do we have option to choose DRC cloud, or do I always need to go with integration suite?
You can choose, but how will you manage the custom iFlows? In DRC cloud, it's a kind of pre-configured things which are given integration. They call
Any
it
reason why they have separate, one with integration suite, one with DRC cloud?
The reason being, it's a complexity specific. So if a country is like Belgium, which is a direct flow, nothing in between. So for example, for Belgium, it's people to customer, and again, that channel closes, right? So why would you need a customer iFlow? Because custom iFlows need, again, extensibility, maintenance. You have to do a lot of.
Can we assume, if there is ASP between, then it would be integration suite. If there is no ASP, direct integration.
Yeah. I think that's a fair statement. I think SAP has done that. Anything which is PayPal, I think because PayPal is a larger chunk of audience, because it's most of Europe, so they do it through SAP DRC cloud because PayPal. If you're the PayPal network, then they have created just one connector there, and then SAP supports it. But for various other countries, so they have just bifurcated within PayPal and non-PayPal. If it is PayPal, then DRC cloud. If it is non-PayPal, then you have to do it through iFlow.
Right, exactly. That's why I consensus it. Okay, it's a good information of it.
Yeah, this is actually very interesting, the way the whole architecture, how it is flowing. Yeah. But the one point is, though, it is still, some of your transactions are actually from HEC. Your transactions are still replicated at BTP level, right? Based on which solution that you're using, whether DRC cloud or the SAP.
The data would be replicated, Krishna. So
SDI,
through APIs, you pull the data.
APIs, SDIs.
Okay.
It is just transmission, Krishna.
Exactly.
Okay. Oh, okay.
So, till the time you create the e-document, you are basically within the SAP S/4HANA premise. Okay. Only when you're sending out the data, BTP basically becomes the middleware, a median to transfer the data between your source system, which is SAP, to the authorities, to the government portals.
Yeah. To your earlier point, Vineet, this is just for our thing, for the statutory reporting. I think when you said reporting earlier, I'm taking you back to 1 or 2 slides back, actually. The one that you made. Okay. When you say reporting, there are 2 sides to it, right? One is the transactional reporting, what we use Vertex and accelerated tables to report it. And the one that Advai is mentioning was, it is statutory reporting. We don't use Vertex, actually. I don't think so. I think your tax returns are filed through the UI.
We don't even use SAP.
They file through the E&Y, right? E&Y is the gateway to file.
We have partnered with E&Y and other local tax companies, and they basically help us. Even for India GST, we don't use SAP. We just provide them the data. We just provide them the raw data, and they basically do the filing for us.
So mostly from the group reporting point of view, they take all the consolidation data for the US point of view. They'll report the tax reports there.
Like raw data, transactional data. We basically do it. Like let's say for India, we basically use BDO. I think for EMEA, we have done a deal with E&Y. So E&Y basically takes care of a lot of, like Italy. Like we have not been non-compliant with Italy for so many years. So we use E&Y and these guys to do filing for us. I think for Mexico, it's slightly unique because I think Mexico, we have accounting team, and they basically download the data from SAP and they manually punching the data in the tax portal manually. So that's a unique scenario there for Mexico and Brazil.
Yeah, it's a good information actually. The flow is kind of like very interesting. And somewhere along the line, can you link us back? Because ultimately it boils down to the geography also, meaning at what level of this, the flow, which countries are coming in where? Kind of like, some are somewhere in the between, like Mexico is far in advance. Italy is probably one of the far ahead in the game in Europe. Somewhere along the line, if we can
Korea is very stringent. Korea is very stringent. Even a small deviation from the format will end up in rejection. So you cannot correct an invoice after you have published or send it. So a lot of countries have a lot of different kind of variations. And while we cover the 4 countries, at least I have tried to highlight the differences in these 4 countries. What is the scenario? How are they different? And what is specifically required for each country? So that at least I have made sure, based on whatever knowledge I have, I've tried to create a guide for that. So
maybe that's the reason, I think our business is pushing to use the Smart Bill add-on instead of the DRC route. As you said, they are very complex.
But Smart Bill is an ESP. So again, when you use DRC, right? DRC would anyway connect to
just to add what Rami is saying is, see, Business One is the company and they have Smart Bill as a product. So we have to use Smart Bill because that's the ESP, as you have mentioned. But what they're also selling us is, they are saying that you, instead of using DRC, you use their software. They're also selling as a software which is parallel to DRC. That they are saying that you basically install our software in your SAP directly as a bolt-on, and then use that to connect to Smart Bill instead of using DRC.
Okay, I got it. Many
there are developer programs where they can run it, generate these e-documents and connect to Smart Bills.
Yeah. So I think everybody's doing it. I think E-Invoicing has a slightly more mature product called GTAS, which basically provides a lot of e-invoicing solution, at least more in the EMEA space. But for Korea, I think these small players, they have actually all come up with their own homegrown solution that they're actually selling to big clients now.
Yeah, so that is on the same point, Advai. I think if you can give us an overview, not detail, all of these tax providers, for example, E&Y has their solution for E-Invoice, right? Even Vertex has a solution for E-Invoice also, which will interface to the PayPal network and things like that. I'm assuming Thomson Reuters has the same thing too, because that is one of the big players in OneSource is their product. So how does the DRC compare with other e-invoicing solutions as such?
Competitors.
So OneSource, as you mentioned, OneSource is an add-on on SAP DRC. It can be configured and you can use it as an add-on. So I think that is OneSource I'm aware of. So I was not aware of how EY works. But to answer your question in one concrete word, each of these solution would cater to one particular geography. They would be specialized in that. So if you want to have one complete picture, like as I'm taking your same example that you said, Vineet, for India. So India, you give your raw data to a provider who takes that, submits it, right? How will you do I would say for GSTR 1, every month before 15th, you need to send all your invoices to the government. So you are doing it continuously. on one part. Second part is, again, while submitting or filing a GSTR1 report, all these things are reconciled. So how a third party, just by looking at the data, how will he know that whether those invoices were accepted, rejected, any adjustments were made? So to give you a complete, DRC has an advantage. It gives a complete end-to-end picture in the system with all possible scenarios. Like, since you were talking about statutory reporting, it also gives activities, pre and post activities, like for example MTI, managed tax item. So which item you want to remove from the system or the reporting, which item you want to add which you have missed later. So lot of flexibility end to end. So I'm taking just an example of India. So all the invoices which have gone from your system has marked submitted to the government. While you trigger a GSTR1 report from the system, you pull the government data, just check the government data corresponding to the system data. If it matches, in 90% it will match until something has been missed out. If it is missed out, you generate another report from the system, and until it matches, you send it. So you have the complete view from the sending of the invoices to the government to sending the final report. How will a third party or a isolation solution would help here, and how will a CFO will have a view that, let's say India is still send or not compliant Poland, there is a small players who will handle Poland scenario. And reusability, again, where would the reusability part come into picture? If you have these solutions, again isolated solution, you will not be able to reuse things. Here the configurations are reusable. You do it for one country, other country the go live is 90% fast, because it's all almost similar. You don't have to do it things for the other country completely from scratch. So lot of things which DRC gives you out of the box. For a small corporation, if it is a small corporation in a particular geography, it would have made sense. I would have gone with particular vendors catering to that area. But if at all a global organization who is working on all the countries, then it would be very challenging. Plus, sometimes there is a plant abroad scenario where your company is not located or headquartered or not located physically in one particular area, but still you are doing business in that area, so you are obliged to report the tax or things in that area. So how would you do it with a third party? And definitely these are not the corner scenarios I'm talking about. You can relate it with your finances. There would be scenarios where plant abroad scenario would come into picture, means in your normal business. So these all things have to thought through maturely. We can do it. There are plugins, there are independent providers, but as a solution, end-to-end solution, and if you are using SAP, then I think DRC gives a lot of things out of the box end-to-end.
Absolutely, yeah. I think there is no doubt about it. I think the entire beauty of having like big ERP solutions is because you basically get like end-to-end solution. You don't have to like buy several small products and then deal with integration and technical debt. So I think DRC basically solves. If you're in the SAP landscape, you don't have to look further. You just have to like just implement DRC and then run with it. Krishna, to your point, I just did a quick search. I think the three main partners in the space is E-Invoice GTS and the other one is Elvaro. When we went to what's that Sapphire in 2024, Elvaro did a presentation on their DRC solution. But again, all these solutions only cater to invoicing part. Nobody takes care of statutory reporting. Nobody does it. So there is no direct competition to DRC in that matter, because DRC is the only solution which basically gives you start plus e-invoicing, both the solutions globally.
Agreed, actually. I think there is a small variation of it. When he was saying, I think what he said is correct. Specific to the US, right? When you come to the statutory reporting, because it is outsourced to E&Y has all the regulations which are actually needed, because your tax filings are very coming back to the tax returns filing, right? So they are different. 50 different states have 50 different formats, and your columns and boxes are entirely different. So can you just throw a little bit of 1099 is one piece of it, right? But if you are filing your consumer use tax and sales tax returns every month or every quarter, there's a lot more activity because it is given to E&Y. To your earlier point, Vineet, I don't know whether it can replace, at least in US, it is really hard because there are 50 different filings all the time. You have to do it at a transactional level. So does DRC do with specific to US tax returns filing? What kind of functionality that is already there? Why?
Tax returning, I'm not sure. US sales and use tax, I am aware, but tax
reporting, that's the same thing. Tax, sales and use tax filing.
So if US sales and use tax, so that's what I was explaining. SAP has tied up with 3 main providers, Wolters Kluwer, we have Vertex, and we have Thomson's Router. So all these 3 providers, E&Y, I'm not sure if there is any partnership exist, at least not known to me. But these 3 providers are experts in generating, as you said, tax reports per area, because all the different states in US has a different taxation and total different ways of having tax filing. So all these reports come from these experts. So ultimately what statutory report does is it generates a report, right, on what data is needed. So we get all the data or all the details through integration scenario from these 3 partners. Flow remains the same. You land upon statutory reporting, you generate the US sales and use tax report for different state. You will see different tax boxes and you will see a preview which is being reused from statutory reporting. You will submit it. You will see the status of submission. I think for US it's electronic submission if I on the whole run level. So you will see everything there. So for an end user, it would, for your end user, as in, let's say if Moody is using the DRC reporting, whether it uses for US the report generation software from Thomson Reuters or Vertex or Wolters Kluwer, it would not make any difference to them. It would be a complete integrated solution and partnership exists. So these, if you search on internet or on your product page, you will get the details of these partnerships for US sales and use tax with SAP. So there are a lot of...
Understood. Actually, we have a very interesting scenario along the same line. So Vertex has a product for Vertex returns filing, So all the SAP transactions or any other ERP transaction, it get downloaded into their the product. The one that what we use is a tax engine. I'm not talking about that. There is a separate product called Vertex Returns where you file your tax returns. That is what you are elaborating on. Meaning from DRC, actually SAP partners with Vertex or Thomson Reuters OneSource or Wolters Kluwer to file the returns, right, in US context. Our interesting scenario is we use Vertex for a transactional tax calculation as a tax engine. We don't use it for tax filing. We file it through E&Y, So that is what actually the difference is. It's an interesting scenario. I don't expect SAP DRC to generate the return. I don't think so because it is too granular and too detailed. They have to go through the third-party providers, like in this case. So, but from a DRC reporting, yes. But the return filing, the statutory filing itself, specific to US, yeah, probably not. Yeah.
Statutory filing, it has to go through Vertex only. Like even though if you use DRC, it has to go through the Vertex.
No, actually, Krishna, that's what I'm saying. They don't use Vertex returns for filing. There's only.
If you want to use the full-fledged DRC functionality,
correct.
We have to enable Vertex reporting.
Exactly. And similar reports has been provided by similar reports have been provided by Thomson Reuters as well and Wolters Kluwer. So same thing.
If you have one source, if you have one source, Thomson Reuters as a provider, obviously you'll integrate with them. In our case, it is Vertex. So for the transactional tax, you have to go through the Vertex returns as a product in the future version of it, if you use the DRC route.
Yeah.
Essentially, we need that might have to, replace some kind of E&Y filing, at least in US case, God knows how other areas work. But again, go on, actually. It's good to know. Thank you.
So I think that is why we are in this particular training, because the whole purpose is, I think, just to save some dollars for the company, because I think as of now we are spending so much money utilizing all these small partners, if we just come up with one sort of like integrated solution globally, then we can basically replace all of these particular partners with one solution. And in totality, if you think about it, their consulting cost increases every year. So I think we're going to save quite a bit of chunk of money if we just complete with one integrated solution globally.
Yeah, so one clarification of the way, so we have to use third-party tools for filing tax returns. Like 1099 would directly, we are filing directly without any third-party tools. Is there a way to submit without like 1099 for the tax returns?
1099
without going to third
also
party.
has withholding, right? Also withholding tax. You are talking about withholding or VAT?
VAT and GST, everything, all the sales side of the area also, we have to go with the third party tools like the Vertex and
with statutory reporting you can. So statutory reporting would give you pre-built standard 1099 reports for different variations. Like for withholding, there is one which I am aware of. There is also VAT. So withholding would also need the correspondence to be sent to business partners. So once you file the withholding report, so that also is taken care by statutory report. It would also send the PDFs to your business partner. So it is possible. There are standard reports which you can schedule whenever you want to do. Data would be coming from your source systems. There are standard CDS views underlying which will pick the data. So very much possible.
Okay, so only thing wherever use tax, for example, US, right, it has to go to the third party, like example, Vertex, it has to go through Vertex. You cannot generate directly within SAP without going to Vertex.
Okay,
that is what he said. But right now our scenario is currently we don't use Vertex, we use E&Y for the tax filings.
Yeah, understanding purpose, we have to go with the third party tools, or directly can use some kind of Fury reports to generate the tax filings.
Fury reports, that's what statutory reporting does. So this is a statutory reporting Fury based application. It generates all these tax reports, VAT, withholding, all the reports that have been generated. So that's why this product is there.
Okay.
I'm not getting third party. This is what it does. So
now, what exactly we are going to the Vertex right now? So why we want to go to the Vertex? Can we generate those use tax reports or sales tax reports?
Why this, especially US sales tax, we had a tie-up with Vertex is Vertex had, I'm just giving an example. Vertex had, let's say, 200, 300 reports already built for different scenarios of tax filing in different countries on US. They were experts. SAP did not want to again build those reports themselves, build those logic to generate those reports themselves. So what they did is they used those reports and integrated it with statutory reporting. So for the end user, if you start using, let's say, DRC across your organization, so you don't have to use Vertex separately. So in DRC, you can generate those reports. All the logic generation which currently Vertex Vertex will be handling it. It's just you will be able to do complete end-to-end flow, visualize, send it reports, use all the functionality of DRC statutory reporting with partnership of Vertex. So there are few things which DRC was ahead in terms of tracking, managing, configurations of end-to-end reporting. All those things DRC had an edge, and Vertex has an edge on the reporting side, on the way they used to have the depth of the reporting. So they both came together and integrated SAP and Vertex. Now, if you want to use, you can still use SAP DRC. Reports will be generated with Vertex logic. I think some partnerships or some licensing would be required from their end, which I think they would be happy to do it because they spend a lot of money for integrating with SAP. So in your Vertex colleagues, you can talk to them about this DRC integration. I think they will be happy to walk you through.
So Advay, in a short answer is, earlier Vertex was a big partner who basically generates all the start report, but now with DRC, they have replicated the Vertex logics in DRC reporting. Now we don't need a standalone Vertex solution for start reporting. We can use DRC now to generate the same report through
within the DRC itself.
Within DRC itself, we don't have a need to purchase Vertex now.
No, I think that he said the opposite. For the return, for the statutory, you have to go through Vertex or Thomson Reuters or Walter Kruger.
No, it's already integrated. That means SAP already has integrated with these three providers. So your starting point and ending point will be DRC statutory report. You don't have to worry that, let's say if you tie up with, let's say Vertex anyway is handling yours and you tell Vertex that I want to use the integration with DRC. So they would happily tell, okay, we already have an integration with DRC. What you need to do is you generate your reports in DRC. The logic or the reporting we only provide. So for the end user, you won't be able to make any difference. Only thing is, currently maybe an isolated solution. Now you can have everything in DRC, all the monitoring, visualizing, everything, whatever features DRC provides, everything in DRC you will have. That's the only difference. Still you will have a partnership, but it will not be an isolated one. It will be with DRC.
So in other words, let's say for state of California, you are filing a sales tax and a use tax return at the end of the month or end of the quarter, for example. Okay. Mm-hmm. So you can directly initiate that filing from DRC. Internally, yes. It uses the gateway like a return filing of Vertex, for example, in this case.
Yes.
But for an end user, you really don't need to know what is actually how it has been sent, and directly you can file from DRC. Correct?
Correct.
So because it is going through Vertex returns, I'm assuming because returns is their product, and unless you have a Vertex license, unless it is built into the DRC license itself, is there a separately you have to deal with Vertex to get the returns as a product?
Licensing, I'm not sure because it's very complicated.
Okay, that's fine.
But you can check. There are a lot of information. I think your Vertex counterpart or DRC, if you have anybody as
Krishna Madhava is our SME for Vertex. He takes care of all Vertex.
So then you can reach out to
we can reach out to our account executive and confirm that how that particular thing works.
Can continue.
Just from an information perspective.
Yeah, okay. This is good actually. It's a good discussion, good info. Thank you.
Okay. So I believe good with the end-to-end flow. I think we have understood it. And this picture that I was referring to, these activities checklist, right? These are all pre-built activities with statutory reporting. So for example, MTI, I took one example, manage tax item. So it's a pre-activity where you see whatever is being reported is correct or not. You want to move some items if there is a need. And there is post-tax payables. So this is a post activity. When the tax is filed, you need to update in your post-tax filing. So all these are pre-built. So it's not only just submitting the report, it's end-to-end capability of handling pre-checks and post-checks. Not checks, I would say, pre-steps and post-steps in a way. And then all the generation, all the legal form creations, everything is being taken care of standard logic from SAP. Whichever report you mentioned, like VAT report for Germany or US sales and use tax, or it is a Romanian SAFTI reports, everything will be generated out of the box in the system and can be scheduled as per your wish. The tax accountant or the GL accountant will see them. If there is a report which is due submission and he can take actions accordingly. Then data analysis is a very good feature which statutory reporting provides, where you can see the data. Like normally these data will be XML and JSONs, right? So not in a user readable format, but this preview is capable of opening this report in a very user friendly manner and in a hierarchical way also, because for few countries it will be a box reporting, 5 boxes like GB VAT, but in some cases it will be very hierarchical in nature. Like for example, Romanian SAFTI and these kind of reports are very, very hierarchical. So you want to see them before you file, and also it gives you a very last moment change options. Like for example, you have a deadline approaching, you cannot go back and change the transactional data and generate the reports, because Romanian SAFTI report takes around 3 or 4 days to generate. It has 26 GB of data. So you want to do a last moment change because you are missing the deadline and later you will correct the source data. That is also possible while manual adjustment in the statutory reporting preview. So these are pre-built functionalities. There is a workflow approval again as a legal report. If you want to set approvers in your organization, first level approval, second level approval. So all those are pre-built. You don't have to do it anything
Approval
from
is
your
only
side.
for start reporting, not for
No,
e-invoicing, correct?
not for e-invoicing. It's only for statutory reporting.
Okay.
And then the whole submission process starts. Again, it's electronic submission. Then the DRCC Cloud Edition license will be required. You need to submit it there. If not manual, then report will be generated. It is on the onus of the tax accountant to upload it in the portal and change the status to complete the life cycle. This is how everything is audit trailed. So every step, every change that has been made will be captured in audit logs. This is a complete picture of DRC product as such.
And sorry, one more, whatever you'll be showcasing, is it getting will be receiving the recording like it was mentioned?
Yes.
And is there any document that we can refer for these configuration screens?
Yes. I have prepared one. That's what I was talking. So this notes the training guide, right? This is with SAP. This training guide will provide you step-by-step explanation of all the configuration. So, like for example, when you see the e-document cockpit, what does it does? What are the other options? Process manager, SPRO. So all step-by-step information I have captured. What is scope for invoicing? What is out of scope? So all the configuration, at least in this manner, like crowd integration, if you look at, so it will also give you a particular steps that needs to be done for doing a company, because these all will be more of infra or technical setup. So that's why whoever is responsible can refer to this guide and do it accordingly. So each step is captured very clearly here. So apart from slides, I think this kind of document you would get. I will anyway explain the process flows and other stuffs. Okay, so as opening the system, sorry. Meanwhile, also I will log into Fury. So I hope everybody is aware of Fury based.
Yeah. We are a very pro Fury user.
Okay. So I'm also logging into the Fury instance that I have opened. Sorry. Okay. So anyway, the starting point would be SPRO. You will refer to OMG guide. So all the configuration for DRC reside in cross country cross application component. Then within cross component,
General application functions.
general application function. It is stored.
Document and reporting compliance.
General application component.
Under general application, you can see the document and reporting compliance.
General application is not able to find where exactly it is. It's not easy. General application. Okay.
Yeah, that's correct.
Okay. So you'll find here top again few basic settings, and then there are general settings for activating the document and reporting compliance feature. I'll come to that when we discuss quickly about licensing as well. There are different countries. So you would see these countries based on which feature you activate, and also there are specific. So here if you see, we have activated all countries. If you go inside the views, the all countries checkbox is clicked. That's why you will be able to see all the countries in this list.
We see only one piece in our system. I think maybe
because you would have activated. Yeah, you would have. And there is
reporting, compliance reporting. Yeah.
Correct. And there are licensing repercussions when you activate this. So number of countries you activate, I think SAP has some logic to bill you in that manner. So we'll come to that in the licensing part that I was explaining previously. I was talking in the initial level. So before that, we see Fury tiles here. There are various applications which we will be using in our journey for this whole training program. To start with, and you can search all the applications here. You can add your applications.
Advait, this client is 225 or 2023.
I think 2023 is what they have configured, if I remember.
Yeah, that's fine. That's fine. So I just want to get that context because we are in 2022. So we are just trying to figure out that this is 23, 25.
I believe it's 23. That's what I requested.
Yeah, I remember. I also remember this was 23. Yeah.
So we go to this. This is the app that I showed in the slide, Manage Document and Reporting Compliance, the CFO view of it. So if I click this, remove the dates. So I wanted to see all the dates. Now you see the document action started appearing for invoices, right? So here it would give you a complete view, CFO view of things that are happening in various countries. So for example, document action required. So these are the invoices that have been failed or that have been lying in the system where the response from the government maybe is not accepted for Belgium, for Hungary. So this portion is for document, and if I click, it will traverse it to the manage invoice item app. And then this is from the reporting part of it. So all these reports are due from quite some time. This is how you would see in a statutory reporting framework. These are data are coming from statutory report. So to answer your question, I would also just like to show you quickly the 1099 US report that you told should be here. So if we go into statutory reports, and these are the three activities that I was mentioning. Pre-activity is managed tax items. Each is a few separate Fury applications, but clubbed together as an activity. Maybe once we go in detail on the statutory reporting part, these all have a complete detailed explanation. So I can just quickly show you that these are, it will show you the documents. If that is a proper document, it will all come here. You can choose to include, exclude from your reporting. So this again, and then there will be after your, this will be the main activity of report generation. So if you see, this will generate a VAT return. This is what reporting means. So for example, just taking an example.
Before going to the run starter report, then we have to come here. We have to do all the options.
There is separate. This is just a view. So if I'll tell you, if you go here, this is the Run Statutory Report is an app. So we can add that app, Run Statutory Report app here. Through that Run Statutory Reporting app, you can go and check for the reports that are already there. So SAP has already delivered standard reports. For example, I just wanted to navigate to the app and statutory report here, right? So this is the app, right, where you see this is for statutory.
What we are using currently. Before running this one, you have to. Those are the prerequisites for the
So if you see US withholding, I was telling that you have 1099 US withholding. There will be VAT withholding will come with the business partner certificates that needs to be sent. So this is a legal requirement for withholding reports normally. So if you see, I'm just taking it. It should also have US sales and use tax. Not sure if it is the 2023 system they are yet to release. So they have released it in cloud. For OP, they have not yet released 2023 system. You will not find. So only for cloud, they have released US sales and use tax. 2023, they will downport maybe later this year or maybe mid of somewhere in June, July, something. So just give you an example. So if you take, if at all, so let's say a US use tax report, you will do the same manner. You'll just go and see if there is some reports in the system. You'll pick one. Sorry, I'm deviating from the topic of e-invoicing a bit just to make sure that we close this statutory reporting part loop that we do. So these things which come, this task and all the status and submission due dates, all will be logic of the DRC framework, right? Until
so
you
one
generate a report.
clarification, this is the run static report, right? You are
Yes.
showing the other manage report or something, right? What is the main difference between these two?
So this is the manage document and reporting compliance that I showed was CFO view of everything. So it's a one console in the PPT. If you remember, it was coming somewhere here, right here. So this is this is a view which will give you complete view of e-document as well as statutory reporting in your system. What is pending, what needs action, how is the status. So this is the app that I showed, which is kind of an entry point to a CFO, or that's where is the difference. Because if you use isolated solutions, this view you will not get anyways at what is there in exactly in your system for all the countries. So that's where I wanted to just show this app first, which would navigate to everywhere. So now I have navigated to to run statutory report, right? So just taking an example of US sales and use tax, till here everything will be in DRC, no involvement of Vertex. It all comes from DRC. This is a GL tax accountant view, where as a tax accountant, I will see what all the reports, when it is pending, what is the reporting status, it is overdue, is it submission completed. So all the details I would get here. And if something needs action, like say overdue needs an action, I go inside, I see there are no activities here. So I start a run. So here, if I click, this will call the Vertex API and integration, where they will have all the generation. They will pass on the details. I will have the report generated in my system.
So instead of taking DRC itself, it is going to the Vertex and getting the data from the Vertex,
correct,
right?
That's correct. Correct. Because it's their report, and we don't differentiate like that. It's report as an end user. So maybe you, when you're using the solution, you would not like to have 10 things in mind. Where is the solution generated? How will I? So everything is harmonized. End user wouldn't even know that Vertex has been integrated for US and sales tax. I'm using the solution, and then all the tracking, everything works seamlessly. So that's the reason I wanted to show this.
So what is the main reason why it is going to the Vertex level, like withholding it's not going to any third parties, right?
That's
withholding itself, directly it is going to the SAP
that's the strategic reason I explained, that SAP does not have in US market. SAP does not have that much reports. Like I would say, Vertex is an pioneer in US sales and use tax reporting. They have all kinds of reports which is required in all the US, right? Why would SAP build those reports again when Vertex have done that? So DRC is a strategic call where DRC would not like to invest in creating those many reports to capture US market. Anyway, they have made a Vertex as a partner, where what Vertex will gain is the more and more customer use DRC, and they will integrate it. Then customers in US will not have to go to any other solution. Let's say same strategy applies for Wolters Kluwer, Thomson Reuters also. Other than them who have not integrated, so those will still depend on the isolated solutions, right? It's a strategy.
So one of the major difference is 1099 filing is a federal filing with IRS, just once a year, whereas sales and consumer use tax and sales tax filings are every month or every quarter based on how the corporation is set up, and in 50 different states. Okay, and also they keep changing, because the state regulations actually, they are not controlled at one point. Everybody, they decides on their own. The return formats and the filings and the requirements are very, very different from state to state. So it is almost impossible to keep track of it for a company like SAP. Same way like transaction tax, they will allow you to do native one, but if you need the granularity, they will defer it to a third party like Vertex or OneSource, or same reason.
Understood. Yeah. If I implemented the standard SAP taxation, right? Like, for example, there is no Vertex involvement. Like we implemented standalone SAP self-tax calculations, even all the jurisdiction level and everything. That time, this DRC will work.
No, it won't. It will work, but still it will call Vertex returns only, because returns is a different ball game altogether.
No, my example, there is no Vertex in our example. One of the, I see many clients that they don't have any Vertex. They have only the tax calculation within SAP, like all the jurisdiction, state, and the county, all the tax calculation happening through tax procedure, and all the values are within the SAP itself. There is no third party involvement.
Correct. But the point is, your filing is again done through Vertex only, right? In this case, you can use DRC. You can generate a statutory reporting, even if you are using a standard native SAP functionality, no third party also. You have to use either of those three gateways to do the filing. One is one source from Thomson Reuters.
So DRC is not capable. Even that level of enhancement is not done in the DRC.
Correct. Even if you don't use Vertex also for tax calculation, you still have to go through their gateway to file the returns.
Okay, maybe in the going future they may add that functionality. Understood.
Maybe there are two differences. There are two differences, which going to a gateway and filing is still being done in like, for example, India, where they go to different service providers or e-save portals, or directly they use token-based authentication to file the returns. So those capabilities are still there in DRC. So like for example, I'm just taking a simple example of UK VAT, where you need to submit the report electronic to the government. They do a token-based authentication. The token is valid for, let's say, 1 year or so, or 6 months. But in India, the token gets expired every 15-20 minutes, and then whoever is the boss, I think they get the notification. So all those complex features are also part of DRC, where all these authentications are checked and directly the returns are filed in the portal. So I wouldn't say and SAP Tax, SAP IT, or SAP Tax has a lot of tax filing logic combination. It's all source data. All the taxation logic, everything is there as a condition in the source data. So getting those data, doing the calculation is not, or the periodicity. If you're talking about periodicity, it needs to be submitted every 1 month or 50. So similar, there are other countries like India, GST, Spain, all these things have 1 month of time to file. So neither periodicity, neither complexity, neither the portal dependency is a challenge here. The only strategic call that has been taken is because of the market, so maturity of the market. So SAP was mature in all these VAT taxes, withholding taxes. They have their own CDS, own data, all things created reports. All these reports are standard delivered by SAP. But a specialized market like US, where SAP does not heavily wants to invest in building the reports, like 120 or so, there it is tied up. That's where it needed the experts, that I use your reports, you use my framework. Let's penetrate into the market where both of us cannot go individually.
That's only US and Canada both in that case.
Sorry, I didn't get.
So for the US and Canada, both countries required to get the extract data from the Vertex in this example, what we are discussing now.
US, I'm sure, but Canada, I'm not. For US, I'm sure, but Canada, I'm really not sure whether Canada has also been included. As far as my knowledge, it's only for US at the moment.
Okay, got it.
Okay, now coming to our dashboard. So remove the limits. So you saw a navigation to the statutory report. This place you see document action required. So this will navigate to the manage e-document cockpit. So this will take you to the cockpit, show you what's pending, what are the reports that are pending, etc., to take action. So here, I think some dependency on the data side. A minute. Okay. You would say not in a very user-friendly manner. So e-document cockpit is not that user-friendly. So you see Belgium invoice, 6 invoices are there where it's still they are sending requested and still there is a red status. That's why this 6 appeared on to the dashboard. Right. So to just highlight.
So you have to fix all these error documents, then go for reporting.
Yes. Reporting, in sense, if it is connected, like e-document reporting or e-document sending is separate. If it is connected process, then only you should trigger the statutory reporting. Yes, in that scenario. But these are all a view for CFO to see what exactly, like Belgium, right? We saw the invoices, number of electronic document currently is in which status, few are completed, few are in process, for few we required action. So 6 that we should require any action from our side to see what is the current status and other stuff. So a lot of widgets, charts, graphs for giving you a complete picture of the document, both from e-document side as well as from statutory reporting side is.
So if you have any errors Advay here, we cannot file the reporting. The report will give you an error when you're running run report.
So anyway, report won't give, because see, report would be generated on the data, whatever the data exists. While doing a validation with the government, maybe government would say, I did not receive these 3 invoices, and you have sent a report which includes these 3 invoices from your source. So there would be a mismatch, and then it would be rejected. So chances, it's not tightly dependent that if e-document fails, you cannot generate or send a report. So both are not that directly linked. It's on the user consensus that whether they take a call that, okay, if this invoice should be considered or removed, or what would be the next action.
So this is always precondition, like the prerequisite. First, you have to run this report and make sure there are no errors. Then go and file the reports.
In the ideal scenario, yes. Yeah. So otherwise, what could have also happened is you feel that these are maybe documents which I can consider in the next cycle. So you can exclude it from reporting based on the app that I showed, manage tax items. So you can exclude those invoices, and then you can still submit your report, or you can do some manual adjustments at the last moment. Later, you can correct your source data accordingly. So there are multiple options available. Okay, so manage tax items.
So with India, it is almost seamless. You can file both various types of report directly from DRC with India.
Yes, it's seamless. So all the same type of report, like there are variety of reports currently, which is again a tightly coupled example of e-invoicing and statutory reporting, plus the draft returns. So they do it in a very seamless manner, end to end. So India is live, I think, from last year. So they have a complete end-to-end scenario in GST 1, GST R3B, all kinds of variations in GST reporting.
Oh, great. Okay.
And these are all submitted electronically to the government via BTP DRC app. So it's all electronic submission, all automated with iFlows in BTP. So it's a complete solution. Now they're also enhancing more on reconciliation kind of use cases in statutory reporting itself. So, but yes, to answer, it covers end to end, because there are a lot of complications also when the solution was getting built. I can take one example of a race condition. So while an invoice is being reported, suddenly there is another trigger where there are chances that invoice could have been picked by 2 of the jobs simultaneously if there is not much difference. So then that will act as a dual reporting of the same invoices, and which invoice to whatever invoices have been submitted or in process of submitting. When you submit a statutory report at that point in time, it should only consider the invoices that has been already submitted to the government and are in successful state. So if I have generated the report now, and let's say, and it's a user, right? If I generated the report now, in 10 minutes of time, I see there are some other invoices that have failed, but it is picked in my selection now. There also can cause a lot of problem. So there are a lot of synchronization that has went in. So now I think everything is running smooth in India, GST reporting.
Oh, okay, great. Actually, I mean, so you don't need to use any other GST.
So one clarification, here in the SPRO. So right now the country region specific settings are there, but the next one, when we activated, what are the steps we need to take?
Didn't get
the other thing like invoicing, right? The invoicing piece is not activated here. What are the steps we?
It's activated. Oh, sorry. You mean 1 minute. Let me go country by country. You would see two things.
And we'll see whatever we are. I know we have digressed. Just to level set the context here, guys. This training that we are actually doing here, it is focused more. See, DRC is like now that at least you have that appreciation. DRC is a universe because there are two broad buckets here in terms of e-invoicing and statutory reporting. What I have asked and ZaranTech is focus on e-invoicing because that is a need for the hour. Statutory reporting is not in scope for this particular training. Only if time permits on second week, he'll touch up on that particular piece. Otherwise, what I have told them is we'll basically do a separate session on stat reporting as our things sort of like progress further. So I understand that you guys are very excited and want to learn this particular product, but yeah, I think Advay, please interrupt if you think that we are basically going a lot of off track. I just want to complete the e-invoicing piece first because that's what the requirement is. And probably in week 2, if time permits, definitely we'll basically cover the start reporting. Otherwise, we'll continue on e-invoicing first, and then we'll. But rest assured, guys, this is just one piece of the training that we are happening. We'll probably have a few more trainings later part of this year where we can focus on statutory reporting and other aspects of DRC.
Yeah,
sure.
Okay, cool. Thank you, guys.
So every component, as I mentioned, would have these two parts: electronic document processing, statutory reporting. All of these two parts will have a different configurations and settings and all the nuts and bolts to keep the whole scenario running. So just before this, I would also like to first run a transaction where you would have to start first. So that is the business switch, right? The first business switch that you want to run to activate the product itself. So you would have already activated in your system, but this is a switch framework. So SFW5.
So, Advay, one quick clarification here. Since you are here in the SPRO, can you go back one more second to the
1 minute.
for the reporting compliance path?
Okay.
Document and reporting compliance.
Just 1 minute.
So I see some additional thing in your system that's what I want to see. What
1 minute. Let me just go there once again. Sure. Don't select until I open the. Okay.
yeah, let me expand that one.
Yes. Yeah.
Okay. Yeah. Expand it, right?
Yeah. Expand. 1 minute. This touches virtual system is little. For me, 1 minute. Just expanded it. Yeah.
Okay. How do we get the other pieces like general settings to extendability, all these pieces? Like, do we need to do separate activation to get? We have only one thing right now: country, region, specific settings. We don't see the other pieces like general settings for extensibility.
Yes, so that's what I was explaining. So
you are explaining to activate those things. Okay,
correct. So we go to the switch framework.
These are the BC sets, the business content sets that you take. Okay.
No, I will cover that as well. So every single step or note is mentioned in my slide deck. So I've gone step by step and mentioned everything that is required for DRC for reactivation. But this is for the general feature. I'll come to that 1 minute. So here, if you see, this is the place where it's a switch. So change in business function. So business function is the one which we activate for the country level reporting, or we need a particular business function or a switch to run all the functionality. So for us, it is Glow DRC. So Glow is globalization. So I'll just search for you.
So this is something that basis will be doing it, or being a functional consultant we are
No, this would be all basis activity, but you should know this because it will also affect the licensing part. I was just checking scope functions. I think it should be in not able to switch. Just delete should all come here.
Is it enabled? That's why it's not showing up?
No. That will not be the case.
Yeah, it should come regardless. Okay.
So maybe it is this virtual system setting differently. Let's also check the pattern if it's able to find it. Okay. Or there is a separate switch. Cross synchronization. I think in Blue they have even in your system. Are you able to find? Can you just check in this transaction?
Let's check whether we are able to get into the transaction.
If that is a basis
C code, 5W, correct?
Yes.
Sorry, it can be like in GUI only.
SFW5.
SFW5 switch framework.
SFW5, okay.
As I checked when I got the initial system, it was there.
What are you trying to check here?
Glow DRC switch. GLO_DRC.
Okay, I think we already enabled it part of the ACR setup, I think.
Yeah, we enabled
in which client, Rame? In which environment?
No, I think it should be in production actually, because this is the part of the ACR, right? So we must already enable that.
So I have access. You want to navigate here? 321.
Okay, so this one.
Yeah, even I can see that glow underscore DRC.
You have no change authorization, just only display.
Sorry.
Yeah, we have GLO underscore DRC.
Okay.
Shall we share our screen? Like if you.
Okay.
Yeah, I think we did this on first step, Krishna, when implemented back in time, I guess.
Yeah. We did only for the reporting point of view, Rami, not for the invoice piece. Like invoice piece are not able to.
Tommy, if you have access in DM system, can you share your screen?
Yeah, it's here.
Yeah.
GLO underscore DRC.
Yeah.
Sorry, Rami, do you want to take it?
No, go ahead. The same thing I'm going to show you.
So I can give you control until you change anything. Shall I give you control? Other?
No. Just show that it is active, right? The switch. If you hover around the switch at the end, the very yellow kind of a button that you see on the leftmost side.
Okay. So got you here.
Yeah. So here,
it's
it
active,
would show
actually.
it's active. So this is the first step to get the product active. So this should be active in your system. Then only you will be able to see the document and reporting compliance feature.
So then that is active, but only the second piece, invoice, we are not able to see an SPRO, but reporting piece we can see.
Yeah. So for that, then there are some country specific activation. So then again, there is another switch. If you can open the document, it is GCOV.
Yeah, it's slow. I think I don't know why, but
no problem.
Sorry, can you repeat?
GCOV.
Yeah.
Underscore ADV.
Okay.
Underscore LIC.
Okay.
Underscore CTR.
TDR. D as a Denmark.
No, T.
T as a Turkey. CTR.
Okay. Got you. Is it finding? Not finding? No answer.
Something little.
Actually, it's slow. Suddenly, like system has gone slow. I don't know. Maybe let me try again with the shorter text. Will it?
GCOV underscore ADV star. You can give.
Let's see. Let's check.
See if it gives something. So this country-based activation. It's again part of the same view. If it doesn't,
nothing. It seems like
from
nothing.
here. Okay.
Nothing.
Fine. Then we can navigate this through the SPRO also.
Okay. Okay. Just one question. You were talking about, why SAP has actually partnered with third parties in US and not about the frequency, nor because of the format. What were you? I didn't catch that. Can you repeat that? What you said? It's not because of the frequency or not because of the format complexity. What you said?
Yeah. So it was a strategy. Basically, it was a strategic call from SAP because in US market specifically, I would say companies like Wolters Kluwer, Vertex, and Thomson Reuters had far more experience, and in terms of reports, right, the country reports or the state reports, the variety of taxation that they have covered in US market, they had lot of reports already there with them. So what was missing is DRC kind of functionality end to end, which would track, report, configure, all those things. So they used to do it individually for these reports. But as a strategic call, SAP does not wanted to cover or create all those many reports with SAP because again, they will lose market.
Yeah.
So that's where from SAP side, DRC given advantage to Vertex, Thomson Reuters, and Wolters Kluwer to have one harmonized functionality within SAP system. And what they would get, what SAP would get is all these reports which they used to have generated in their system but shown in SAP. So for end user who is using DRC, let's say DRC has some 500 customers, and they see that, okay, I can run my US and sales use tax in my system. So they would be very much happy to use this solution, or the reach of the solution will increase for both, for SAP and for all the three partners. So that's where It's a strategic call that has been taken, especially.
Okay. It's more of their preference and choice. That's how they did it, rather than any other frequency or complexity or any other issue. Is that right?
Correct. Yes, it's a win-win situation for both.
But in India case, they don't. Nobody probably already have that expertise. They decided to do it by themselves. In India, you said pretty much.
So in India,
you can,
correct.
Yeah.
So in India, we had lot of, means the solution was there from long time. It was a different kind of solution, but in India, everything was from our system, and we had that expertise already. GST reports were built in SAP system from very long time. So we have already had them. It's just matter of the draft reporting and all these pieces which were previously not there, that also got built in 1 year or so. So we have draft reporting, we have now maturity of reports were already there with SAP for India market.
It's just a matter of repackaging and integrating them.
Yes, repackaging and upscaling to the requirement where now government sends a summary, short summary. We need to reconcile our long summary accordingly and then match and send. So it was just kind of a upscaling with the newer regulation.
Oh, okay. Yeah. Well, makes sense. Somehow I thought, because see, for SAP has a native tax calculation functionality, right? So, but the third parties come in and they do much more granular level, for example, at the US and North American market. So they let them do it actually, right? Vertex or OneSource or Walter Clover, they all can plug into SAP and do the transactional taxes at a much granular level. Correct, right? I was thinking that is the same reason why they let even the statutory filing also left with them, but it's more because of the partnership. Yeah, it makes sense actually. Okay. And when we are looking for reports, we didn't find, the sales tax and the other reports like the 1099, those things we found, the templates or whatever, right? That is because of the version of the HANA, you said, right? It's 2023 or later, they added that also. If you go to the Fiori app, we are only finding the withholding reports, correct, right? For the US.
Yes. Why? Because, 1 minute. Am I audible?
You're audible, but you're not sharing. You're not sharing.
I'm not sharing. Yeah. So why? Because the solution for US sales and use tax is released only for cloud at the moment.
Oh.
For 2023, it would be available for 2025, 2023 later in the year. So they have not planned it to move it to OP. Again, strategy of cloud first and get the cloud customers first, etc. But there is a plan in place, not officially committed anywhere. But plan is that they would make the solution available in 2025 and 2023, somewhere down the year.
Okay.
But in cloud, if you have cloud access to SAP public cloud system, you can see those integration exist there.
So if you have a cloud version of it, you can see those reports also, but you don't, HEC, you don't see them.
Yes.
Okay. Okay. Makes sense. Yeah, good job, actually. You have a good, decent background knowledge. Yeah, good job. Good content.
Thank you.
Okay. Maybe from settings perspective, maybe we can continue exploring. At least you can just check, because that is purely a basis stuff. It doesn't make any big difference. So for this basis piece, I think your document already covers, because now or then we'll have to provide this document to our team members, basis team also.
Yes. So with the same document, I was this vendor who has provisioned this system. I was in touch with them. I provided. So many things are still missing. They have not done the outbound configurations and etc., giving the reason that the scope of the training is less and the expense that would lay for BTP and all those things. So they have provided a very restrictive kind of environment where many things were missing, but nevertheless, this once implemented, all the steps I have documented in my PPT, that what needs to be done exactly, which TCI. So just if there is a basis consultant or technically if somebody knows to apply S note, they would know about the TCI, the transport-based integration, that all the features clubbed together are implemented. So wanted to touch few aspects on that. Maybe.
So if any of those elements that are not in this particular document, so can you actually help us bring that up? Because
it's there. I think maybe we can revisit once. Right? Okay. So I'll start then. I think people are there. Can I start, right? So no.
Yeah.
Again, so fine. Then share my screen and okay. So now at least we know about, we did some hands-on in this system. We saw the Fury app, at least for the managed document and reporting compliance. And we will go through few pending items. Like this picture is clear to everybody. We'll talk this. We spoke about the problem. I'm just refreshing this, the integrated story. I hope everybody is clear on how the whole product works together, because you will see this again and again in a different picturization format from SAP also whenever you attend any of the DRC training or a seminar or any invoicing summit. So they will provide this picture again and again, because having both the products together in under the DRC umbrella makes much more sense going forward. So now little bit on this part of this kind of an architectural slide for the product. Also I've, with the same content in a much granular way, I have depicted in my training guide. I'll come to that. Maybe quickly I'll walk through the slide here. So which will cover a little bit of architectural part of why there are different country version, why we look for S/4HANA as the source of truth. So can you just, so all the real-time things, right? Whenever you create an invoice or you create a accounting document, everything will be from S/4HANA source. As I told, also I told about one more flavor about the CFIN document or CFIN's replication, which can be also an option, as I mentioned. So there also it would solve the problem if you have a data which could be consolidated into a CFIN system. Then I think central finance could also be one option. So we'll come to that later. But here what makes sense is there are different country specific content in the source system. So where the business process are supported end to end, we saw various countries populated when we saw the configuration. So if you see here the countries, right? So they all come under different umbrella. So there are various countries for which already standard content is being provided. They are all activated because if you remember, we checked the country all in the option. And I'll also talk about in the licensing part how this licensing would be calculated. But at the moment, all these countries will have both the options of statutory reporting as well as document part of the product. So that's the reason there are, again, why different countries and not one standard process? Because of globalization or localization, you say every country has their own flavor of regulations, have their own flavor of implementing those regulations. Some are very strict, some are very lenient, some needs a central integration process, some just go by normal manual submission, but overall the whole product should suffice all the country requirements. So that's why you would find different country version. Switching on to my
one question on the SPRO. Can you go back to the other screen? 1 second.
Mm-hmm.
So here, how do we get the electronic document processing enabled? Right now,
okay. That's what I was mentioning, I think a few minutes back. There is a process, I think in our day one only, there is a slide. This is not mine, 1 minute. Okay, so here I mentioned what all notes needs to be applied for what functionality. So if you see e-documents, this note needs to be applied via TCI. Then only you will be able to see the document part of it.
That configuration part.
Yes, there is complete step-by-step process, which for OP, for on-premise. So I have mentioned that all the implementation setup, what needs to be done, customizing guide for e-document, what all things are needed specifically, and even for the country wise. If you see, let's say for Italy, what all things would be needed, for Belgium, what all things will be needed. There are certain notes that needs to be applied, and if you apply
This is
these
given
notes,
Unit 3?
yes. So mostly for BC sets. So what are so everything which you can pass it on to your basis consultant, whoever is doing the system setup. So ample amount of
I
information
think
step by step.
Rami is here. He coordinate with the basis, but he is on the technical side. Like
Okay. No.
This is very
So-
useful for me.
Okay.
Yeah, I joined a little late, so I think any set specific configurations, we can do that.
Yeah, so this document, if you follow, it covers complete step-by-step details, also links to the SAP configuration where individual configuration, like say
Yeah,
for
I think if I
statutory
see
report-
here BGRFC, that was the
Mhm.
issue, Krishna. We got it, the last time, when we are doing for 2025.
Yeah.
ADS is their output. I think all is set up. We already have in place because we are running, ACR on ES.
Yeah, Rami, one thing we have activated only for the statutory reporting point of view. No e-invoicing point of view. Like this is the document he's referring to enable invoicing part also in the system.
Okay. Yeah, that's fine from some business. We can do that. That's
Okay. So all these things are mentioned. So I've highlighted nodes and TCI. What are the steps? What is the need? So why TCI? We need to go, and which all prerequisite for e-document, what needs to be installed, what are the support packages. There would be certain add-ons like application interface frameworks. So it's kind of a job monitoring, who sends and receives the details. So all the web services part, again, like how statutory reporting you have configured. I mentioned all the notes that are required for prerequisites for e-document processing, even the BC sets. So for people, what we know, what we would need for people, countries, world, there would be requirement also where government would need in the mail. All these details in the mails also from their side when they need the supplier invoices in mail, what needs to be configured there as a part of Adobe document service, and all those details are anyway captured here. So that's what I was referring to, why you're not able to see the I would say the setting,
the general setting
Yes.
and the extensibility. Yeah.
Correct. So moving on to this architecture, then again, same for country specific, it would be issued. There will be a country specific settings. Although there will be a country specific setting, but the product includes everything. You can do it for multiple countries, just the configuration. That's why once you set up the first country, all majority of these configurations would be same except few that would change. So we will come to that as we move into process manager, we move to e-document cockpit, etc. So you would realize that once you have done this, there would be a repetition for other countries. So not a lot changes. So that's where we have different country version residing in the S/4HANA business technology platform is more from the submission. So here you have to understand anything related to submission would go to BTP, which again will have two flavors: submission via DRCC, that is cloud service. Coverage will depend upon again availability from the tax authorities. However, when they are available, there would be iFlows, or there would be integration channels that will be available, and specifically for electronic communication. I'm mentioning this again because this piece is little less known, that end-to-end electronic communication can be triggered to the tax authorities and the response also can be received. This facility is built in DRCC service in BTP. So, and again, depending upon scenarios we talked about, if there is a more complex scenario to build custom iFlows, we can also have a separate tenant for using the CPI, which we call it as. So there is architecture. Again, this is more from SAP's architecture perspective. I tried to break that in what it means to e-document in my document. But before that, maybe a quick look at the licensing. This is again important from the leadership point of view, because as I mentioned, what you would need, what would be billed to you would be SKUs, and SAP also bills in the combination of the countries you activate. So that's why if you see I've activated all the countries, I think vendor through vendor, but each country will have a company code level reporting, right? So I'm just telling a simple mechanism on how SAP normally would bill it to you. So misconception is I brought the product, I've activated the licensing, now I can do about whatever I would need in the system. But it will not be the case. There will be a consumption that needs that normally is being measured. So for public cloud also, you can measure it in somewhere in SAP. For me, the interface that you will have, it will show you the reporting, how much is the consumption for DRC, is it red, is it under your license capabilities. So licensing here would work on, again, very complex factors like company code and country combination. Let's say for one company code and for one country, I have generated one report or two reports will count as one. And for same country, if I have another company code, I have generated a report will count as a two consumptions. So overall, number of countries and company code combination you run the reports for will calculate your metering, something in metering they call it as, and consumption. So you should be very careful when you activate a country, activate the usage, and etc. So just a heads up on
Everybody
that.
space a number of transactions, right? I mean, how many we send?
24, they say sending is not the criteria. So it's generation. So sending is not the criteria, it's generation. Basically, there is a table where they capture all the generation with this combination. So they bill it accordingly. So it's a very complex case. I don't know, a lot of logic goes behind metering.
But I think that is only for the PayPal one, where we use the SAP Cloud.
PayPal one is subscription based, but even for OP, I'm not sure for HEC, right? HEC also, private cloud also, they would have, check with your account executive. They would have some mechanism where they would calculate the metering part, how much you have.
Because initially,
used.
when SAP sold the when we were actually discussing in pricing and everything, everything, all these particular details are being handled by our boss. But what he told at a high level is, as you said, there is a country and there is entity. So entity level comes into play when we do stat reporting. If we don't use statutory reporting, if we just use e-document, then we just have to pay for that particular country and then the number of transactions. But if as we enable statutory reporting, then we also have to pay for each entity that we use. Like let's say in US, if we have 10 entities, we have to pay for 10 licenses. But in comparison, if we just have like one entity in India, so we just have to pay one entity from India perspective. So only one license will be utilized.
Exactly. Yeah. So again, short it down 1 minute, I hope. So here again, if you see, there would be some SKUs. This is for public cloud that you have HEC, PC, OP. So here, if you see, these are the two license basically that would be required, SKUs they call it as, and also particularly based on the country what you would need. So you would need DRCC Cloud Edition, or you would need SAP Integration Suite, or even for CPA for some country where you need to have a business document exchange, SDI, etc. would come into picture from Italy. So these are the primary, because once you are enabling your system, you would also need to decide on what kind of license you would need. There's a big confusion. So people get confused in BTP. Do we need the DRCC cloud license or we need the CPI per country. So for example, in Belgium, I have mentioned that you only need the DRCC cloud edition license for electronic submission and report submission. You do not need anything on the SAP integration suite level. So based on this, you can decide the license accordingly.
Yeah, I think top one is more or less the PEPL countries, and the second one is the iFlows through the
Custom
CPI.
iFlows.
Yeah, your custom iFlows.
I mean, we already have the integration suite which is in place, so we're using on for a different project. So only thing was we need to get the DRC in case we need to use for PEPL. Looks like so.
But let's say, see this South Korea one, Rami. We need to pay for that country license for South Korea. In the
Let's
second
say
bucket.
again, subscription, right? Basically, we need to pay to a smart bill. So then only they can, because when I look at the configuration document, so I need to provide the NTS number in my iFlow. I only get it once I have the account registered in smart bill. So once you register smart bill, you need to pay for.
Yeah, smart bill is a separate fees, but we also have to pay for the country license for using a DRC for South Korea.
I think that's all included, I guess, because as soon as as long as we paid for smart bill, that will cover, I guess.
Okay, yeah. Probably.
Yeah.
Cool.
Because since we already have licensing for the CPI, right? So we're already paying for the tenant. So, and again, in CPI, because CPI again they charge based on number of blocks. CPI they have standard licensing per month plus number of transactions. So this one will come on number of transactions, along with our PeopleSoft and DRP count, basically. So, yeah.
Okay, so licensing part is more or less sorted. Then we move to the overall architecture and also specifically tailor-made for e-document. 1 minute, and this PDF is little irritating. Either it is going back. Okay, I hope at least block by block I will go. But this specifically, I have taken an outbound scenario. We'll jump into Belgium case later in detail. But if you see from an end-to-end perspective, eDoc architecture, you would see in the first is S/4HANA, the source system, right? The steps again would be you create a transaction invoices. Maybe it would be transactions like FB70 for FI or FB01 for SD. So you'll create a customer invoice with all the fields that are required as per process. And then the result would be once you post that invoice in SAP, there is a BT functionality if you're aware of business transaction events. So if you have activated those events for invoicing, for accounting and for kind of invoices, automatically there will be a trigger, a BT would trigger that, and there will be no user action needed, and an e-document would be automatically generated in the e-document cockpit. You will be able to see that. So there are different components that e-document framework has. So one is the process manager. Individual component we will deep dive in detail, but at the moment think it as a complete status organizer based on different countries. So you create, you validate, you submit, and then for different countries it is again a create, send, validate, receive it back, get all those statuses updated. So this is a process manager. We'll walk through it in a detail, but understand that this is also one component of e-document framework. Then there is an integration with AIF, that is application job interface, which again is a total different framework of having scheduling jobs and sending those jobs to the desired designation and getting the response back. So again, starting from creation of the source document, is there any doubts there?
When you said, BT is enable, it is country specific BT or it's across all?
It's a transaction. It's a kind of a transaction specific BT. So it would be for FI, for SD. In those manner, this would be checked. I think in your standard system, anyway, BT activation would be done in a transaction called FIBF. So business
we are already
transaction.
using BT for some of the use cases.
So FI document posted, let's say there would be kind of an event number 650, 160, like that for, let's say, FI document posted or SD billing document posted for SD invoices. So those things would automatically trigger it. I think you don't have to do anything explicitly there.
Oh, as soon as invoice got created, I can see document also created behind the scenes. Okay.
Exactly.
I think I see there is a 1025 eDoc. Okay, I see that here. And
you're talking about billing document will be automatically in eDoc?
Yeah.
Okay, so because I was trying to see the Fury tile, but I was not able to find that Fury tile.
We haven't enabled the Fury tile. Right now it's assigned to me with Munish. You're talking about our system or the
our system. Our SAP system.
I'll extend that to you. I'll ask Veena to assign that to you because I enabled few apps and I was testing, all this time. So we can do that. But this document, did you decide whether you do from the SD invoice or FI accounting entry? Because I think in the configuration there are two options out there.
SD.
Okay.
But we'll probably have to enable it for both, Rami.
Both, I think, right?
I think it has only one option. When I look at the configuration, you can only do one. SD or the accounting.
Okay. When we say SD, as soon as the invoice gets created, whether it was released to accounting or not, that's what.
Basically, the link is whether it's going to link to the SD invoice or FI entry. Based on the configuration, what we do, it will link.
Because in all our systems, we are actually, as soon as our invoice gets created, this is real time. Like release to account is real time. So there is no.
That's the process we are having. But where you want to link it, in the consolidation compliance perspective, whether you want to send the e-document as soon as invoice got created, link to invoice or the accounting entry, which is posted to our account, right?
See, so the only thing that Avnish is a feedback there. Okay. Yeah. So by the way, we were talking for Korea, and one of the questions that came up is intercompany invoicing. Okay. So for intercompany, what we do we directly do a GL entry. Okay. In general ledger, we directly do a GL entry. So if we do intercompany for Korea, from a Korea perspective, if you want to also show that particular invoice, can we enable both like the SD billing and the FI invoice?
Yes, we can.
Okay.
So do we have what are the BTs required? Do we have any documentation?
Yeah. Advay, would you be covering that particular piece from an enabling standpoint on the configuration?
So I've mentioned in the document, I've mentioned the transaction for enabling it. For this training system, I don't have any authorization. I see a blank page there, but I mentioned that somewhere. 1 minute, I'll show you. There would be a mention of BT transaction. So this transactions you can mention FI document, you can mention SD document. So there would be some.
But can we enable both? I think the question is that.
We can enable both. There is no such
restriction. Where you see the challenge there?
I just sent the link to you. That's where the configuration you set it up. I think this is something I picked it from I think this is Sebria, but it is pretty much same way. If you can open it, they have option with the accounting entry, billing document, settlement document. 3 options are there.
Accounting following. So are supported, yes. So they both are supported.
But I think we need to do only one of it. They are supported, but we need to pick the use case. Which one is the one?
No, but from a use case perspective, we have both, isn't it? Like we have.
We have both. I try to configure it when it's not allowing me. That's why I was wondering.
Okay, Advait, open the link, the SAP help link, open that. See, scroll down. In the example, see, they are saying it at a company code level. See this example on option 4.4. Company code, source, and activate. So that is where I think Rami was saying that at one particular company code, you can only activate one source type.
Okay. One company code, but if you want to activate billing accounting, your configuration may look like this. So you will have company code 1. Both can be there, right? 001, 001 or BG01, BG01. Company code can have SD and FI invoices, right? If they have not, your company, whatever they have mentioned can be same, right? For both of them.
Yeah, that's the question. But I think we are getting some error. I think when Rami was checking.
Maybe error would be different, but here there is no such restriction. That's what is known to me.
Yeah, I think I just checked it here. If I see, let me share my screen. I think I did quick check on for the 1019, 1020. I enable it for both FI and SD. I can do it here, but I think the next step in the document where we try to do this step, I think I was getting error. If I see here, this is to source type, but I think in one of this view, I got error. Then I stuck up there. This is for the billing document. This is for accounting entry. I can't do both, even though it's enabled. This you're telling here, okay, based on my company code, what configuration you're doing it. But this one is to specific one.
Assign billing document.
Probably we can play around and come back with the feedback later this week, but this is what I think I tried it.
Advait, can you take this action item and we can discuss?
Working.
Yeah.
Any error you would share? Error that you are getting?
Let me. I think exactly? I'll share the error. I think I was getting error. I'll share that. But Vinit, are you? I mean, what is the difference? If I do from the accounting versus the invoice
I was about to say that. That if I enable it at the FI invoice level, and that probably the question would be for Avnish and Krishna, would I be able to pull both, like my FI invoice and the intercompany invoice both?
Yeah, that will cover FB70 as well as intercompany also. That's what I'm thinking.
Yeah.
Both will.
Okay. We'll probably explore that option as we continue.
Okay.
I mean, at least Advait, we can check us, help us, what is the difference if I do from SD versus FI? If I link the document, what is the process?
But there is no intercompany said, Rami, the SD will not involve SD table.
No, which basically, Krishna, I mean, if you assign that to the accounting entry, it will start as long as FI entry is created. From there, e-document will start. If you do an invoice level, it will start from invoice level. That's what I see here. But process perspective, how e-document behaves if I do from SD2 or FI, we need some answers if we can.
I'll check that.
Yeah, if you can check.
I think we'll probably struggle, Rami, when we do extensibility for the header and the line level remarks at that particular point in time. I don't know. I'm just anticipating we may probably get some grief there.
I mean, because the enhancement is at the document level. I mean, as long as enhancement available, I can pull the data from SD or FI. That's okay as long in SAP. Because anyways, there is always link between SD and FI, right? Based on the reference ID, I can look back at the contract and get the information.
It's same. The invoice ID and the FI document is same. The number is same.
Since SAP give both the options, trying to understand the weigh-in option.
Okay, difference.
Yeah. What would
Advait, you got that question correct?
Yes, I got it. So both SD and FI, when you're trying to configure, so is there a check that will not allow, or only one scenario it will allow?
Yeah, that is one. And the second thing is, if we enable just FI, what is the difference between the FI invoice and the SD billing? Like what is the advantage between either one of them?
But here, this wouldn't be based on the requirement that the tax authorities would need. Like, for example, SD.
That is what I was thinking too. Not only just the SD or FI, it is
But
also
it would
based
be
on what they will accept, right?
regulations.
Yeah, what they will accept, what they will be needing.
From a flow perspective, it doesn't matter, correct? Like you first generate the invoice and then you generate the FI document. So for us, it is like more or less the same thing, because most of the attributes that you're actually going to pull, that is configured at the BP level. At least I'm just talking more from a courier perspective, okay? And then you just need the amounts at the invoice level. You just need like what is the total tax amount, what is the total invoice amount, what are the total number of lines. If you get that level of information, for me, between SD billing and FI invoice, it hardly makes any difference.
But it also depends on the country and the specific requirement, whether they'll accept SD document versus finance, and which one is more relevant?
Because Korea, there are multiple scenarios. It's not only one. So there is a consolidation invoice scenario also, where the tax authority would need at least more than
that
20.
Setup, again, that setup is at the customer level, BP level.
Mm-hmm.
It's not at the invoice level. So there is a setting there on the customer level where you basically enable, do you require a monthly invoice? Do you need a consolidated invoice? That is like a BP functionality, not at the invoice level.
Mm-hmm.
See, I mean, if you can dig some information, otherwise we'll play around in the system and figure out. Okay.
Sure.
Yeah, put that in the parking lot and then we'll see how we can answer that question.
Okay, got it. Okay, so moving on to the architecture. So here, first level is, I think, clear. We have different type of documents from the source of truth, financial accounting, sales distribution, even self-billings, invoice verification scenario from the material management side, and different from the business layer. So this can be all source of truth, especially configured via business transactions, right? BTs. Now coming to the e-document layer. So e-document layer, you can imagine as an orchestration layer. So we will have process managers set up that will define the steps, what all steps is needed, create, validate, submit, respond. It will again depend upon the country requirement. For few countries, it will be simple. For few countries like Korea, there would be much more steps needed, and also some bodies to put the custom logic during validation. So again, process manager setup will cover in detail. It would be kind of a more of a technical settings that needs to be enabled. Hook methods would be there. Then we have e-document cockpit. Again, e-document cockpit has come up with different variations. Earlier, it was inside your S4HANA, you would have a very bad look and feel. Then they came up with a Fury tile, and then recently, with almost increasing more look and functionality, they have come up with manage invoice document app. I think it again is asking for. So all new apps, but the functionality remains the same. I just wanted to show you once. I think you would have already played around with the app.
No, we haven't done
this is the manage electronic.
We enable the
document.
app actually. There is no data configuration. We stuck up there.
So manage electronic document is the newly one. So if I remove the check.
This is your e-document cockpit?
Yes. So no, this is just that what I told. There are three. E-document cockpit is one. Then if you go to the e-document cockpit here, you will see a difference where this is the look and feel and of the layout is very different.
No, I think this is if you can. This is the GUI based. This is the GUI based actual transaction.
No, GUI based would be still bad. If you go from here, you will go to the GUI based transaction. It would be.
I mean,
still
the e-document cockpit
bad.
is same as what you access back in GUI transaction. Both will be same thing. There is a T code to that. people can run either Fiori or from GUI. Yeah, that's right. That's
So did we activated the e-doc cockpit running in the
Yeah.
client?
I
client
activated in DM1, Krishna.
DM1, okay.
Yeah,
Okay.
yeah. So I think I assigned to few group actually. I'll ask we not extend that to all of us so that you guys can play around.
Data selection, there's some issue here. Otherwise, it should show.
Probably look at the variant. Is it variant?
I think it's for the particular company code.
I think in SAP demo they showed the creating a document. I mean, I don't see create option. That's why I think.
So it's all company code that is there, at least in this training system. But I think duration matters. Somewhere this duration, if we remove.
So if we want to do practice, we have to use this client. Andre?
Yes, they will provide you. Yes, at least not to everything is there, which I validated, but it would work for you. Means more or less things are there. It is not in that bad shape. At least you will have few data that is created in the system to play around with, to see the statuses, etc. This duration is creating a problem. I think if we remove the duration, then it should work. Again, it's coming back.
Look at days 365 or something.
It's also.
Yeah.
So it will have data. You will have a very bad UI from SAP. You will have to traverse through. Again, there are different statuses which are created. You can also navigate to the source from here. So all those things which were there previously, so it's still there. So here you can navigate to the particular source document, etc. But now same in Fury app is available as a e-document. Same view is also available, but the latest one is, which has more user-friendly way, is manage electronic document. So this will be a little more.
Yeah, this is a true Fury app. I think the other one, what you're trying,
was Fury like.
Yeah.
So here you will have all the colors and different nice picturization and all those things properly done, navigation, XML, viewing. So this is more user friendly.
So this is more or less like a replacement for e-cockpit only. Like it has everything.
Yes. Yes. Okay. Yes. It's a newer version. You don't need e-document cockpit. Again, navigating, source, document, everything, same functionality with a more user-friendly manner you would be able to see here. So you will be able to see XML. I think those things you know from e-document cockpit if you're using it. I'll cover anyway, just to show you that it is kind of an orchestration layer where it's a single interface for all the countries, and this is also one of the USP. So whether you use Korea, whether you use Belgium, for end user who needs to manage this, the interface doesn't change, and that's also a demerit for country-based solution. So you need to train particular user on different country individually, so there is no harmonization. So, and then there is also a part called AIF integration, which also we'll briefly touch upon, more of a job-based framework, which is kind of a centralized error handling and message transformation piece. So whenever the whole message that comes from BTP or the authorities will need to also be propagated to the e-document status, right? So that all happens through AIF, application integration framework. So now Why it matters? Again, I told without this framework, each country will have their separate custom development. So here you configure one, use it separately, and once you do the implementation right for one country, rest all the country work would be very easy. So you'll have the same kind of steps, same kind of configurations. So that's the advantage which it brings. Coming back to the guide, so e-document cockpit, just we had a
Does
look.
this app allows to create documents also only to manage view?
No, it's only manage. Creation won't happen from here. At least to my knowledge, I have not seen, maybe a role specific or not, but I have not seen an option to create.
It's basically to monitor, daily basis.
Creation should happen automatically, and that's what there are options manual.
But I think our requirement for Korea was, they want to have a on-fly notes case-to-case invoice. That's one of the requirement they highlighted. That's why they're debating to use Smart Bill versus the SAP DRC.
I didn't get notes.
Before, let me see if I can pull the notes, because in the e-document cockpit, there is option to enter the notes to the customer. There is a UI gonna show up. So they want to have like a on-fly UI to enter the notes. Specific
because notes will
not pick from the customer.
No. Right? Ravi, we don't have that functionality.
Let me see that. There is
a
question.
When you edit an e-document, at that particular point of time, you can basically provide that if it is a bill or a receipt, or you can basically provide the amendment itself.
And I was talking about this, Vinit. Let me share it. This is what I was thinking. There is a manual email entry at issuance. This is remark. DR doesn't provide a UI to manually enter at the time issuance. Only email address stored in the BP master can be used. However, several email address must be stored depending on product code. They said the user can maintain at the source document side, then enhance e-invoice content extensibility. Yeah. So that means if you try to create an automatic e-document, there is no control for us, right? Somebody has to review it like a Korea team, business team. So probably they want to have this, their control. They'll create it, make sure everything is good before they release to Smart Bill.
But isn't it against the, document is
it doesn't change the content in the e-document. I think to whom it has sent manual email, because generally they'll pick the email address from the customer master, right? Whom to send this.
But they cannot send to, in South Korea, at least to my knowledge, they directly cannot send it to the customer just like that.
No, at least we send to Smart Bill. Smart Bill has to read, okay, whom I need to send this particular e-document to the customer side.
That's true. So today morning, Rami, we had a demo, and where they showed on the customer master, you can configure two email addresses, one primary and one secondary. And that is the email address that basically gets pulled in. I think what this particular point says that if you want to add more than two, then you basically add a field and then use extensibility to configure to additionally pull the information. But again, that basically pulls from the invoice level. You can once the e-document is generated, there is nothing that you can do after that.
Right. But I think, they wanna create e-document manual, I guess, maybe case to case.
No. They have the requirement that they want to edit the e-document. Like they just want to update the remarks, header and the line level remarks. That is what they want primarily.
I think then we are okay. I think, right? So let the document create.
Yeah. For that one, Rami, what we are thinking is we'll basically create. In fact, even for the emails, what I was thinking is we'll basically create 3 text fields on the invoice, because what happens is even when the invoice is generated at that particular point of time, all the fields get locked apart from the text fields. You can still update the text fields on the invoice. So what I was thinking is we'll create 3 text fields for header, line, and email. And if the customer rejects and they say that, okay, you need to update this information there on the remarks at the header and the line level, then we delete the e-document and then regenerate the e-document with the updated values. Okay, because those text fields remains open, and then we can basically re-pull the details, and that way they'll basically get the functionality to be able to do both the activities that they want.
But that way, does the system allow to create manually e-documents? Or it's always going to be automatic job?
So at least to my knowledge, always it's an automatic thing, at least in SAP. Maybe some option for manual creation, because I have not seen a scenario where manual creation of e-document is either required or either entertained. So,
Okay. But
I
even though we
feel there
create
would
in
be
SAP, we can still, put a stop to not to send to customers, right?
yes.
Somebody
Customer
from business.
sending customer is in your control through e-document. That's why in
Okay.
e-document cockpit you can review that, and I believe there is also with certain authorization it's also possible to edit the document with certain restrictions. So that is also, I believe, possible. So until you
What is the length and breadth that we can basically explore? Because that is what one of the questions that we had. Once the e-document is generated, what is the length and breadth of details that we can basically update on the e-document?
Sure, I'll check on that. What are
Okay.
the fields that would be allowed? What is the editable options that would come? But sending is restricted until the user submits the button or a job that is scheduled for picking up invoices that you authorize. I think then automatically it won't go to the customer for sure.
Okay.
Sharing again. Okay. So coming back to the document architecture here, so we are clear on this BTP side, right? Or do you need more discussions on any services that we talked about?
But I think we have separate discussion in detail on this one, right? Later on the agenda. You have
Yes.
2 days allocated for BTP. Probably we can talk in detail there.
Okay, so it's all steps we can talk about. So
Yeah.
Here I just did a quick search for that question, Rami, that you had. It's only allowed if it is allowed by the country for that framework. So as of now, it is only allowed for Saudi, Spain, Hungary, Italy, Mexico, Colombia, and Brazil. That's it. Even for Brazil, it is through extension, but not for others.
Gotcha.
So that's where some restrictions is there too.
They basically mapped the product with the tax compliance. If the tax compliance allow, then they will allow. If not, then they'll not allow.
So tax compliance is in GRC somewhere. It's a
yeah. So sorry, not the tax compliance. Basically, the compliance of that particular region. So if Saudi allow, because Saudi allows based on their framework, and that's why they have allowed it. Otherwise, they have not allowed.
Okay. So now coming to the again mechanism of tax authorities and partner the destination layer. So if you see in the destination layer, I have segregated into different providers. So Belgium, Merciless for people, Italy, SDI clearance. So all these are government bodies which will require the data. For Korea, it's in NTS, home tax, and via ASF. So application server provider ASP. So again, these countries have their own mechanism of how they would like to get the invoices and the subsequent processes. So it is some country, like for example, Belgium, it is allowed that invoice is directly sent to the business partner. So tax authorities only need a copy for the audit purpose. So no approval, etc. is needed to complete the transaction. And they believe the business processing is faster, no waiting time. So there is no waiting to receive the signal. But for Italy, again, the clearance model that we talked about. So SDL is the authority there. So submit directly to the tax authority first. So they must receive an approval before you send the invoice. Then the real-time validation of the tax calculation happens. So SDL does that. And if at all they found that the invoice is not as per the calculations or the metrics, then the transaction is blocked. So until they clear, you cannot send the invoice to the customer. So that's their stringent measure in place. It's more stronger fraud prevention measure and also a slower process. So that's for Italy. For Korea, it's more of a hybrid model. So first, the ASP, application service provider, is kind of an intermediary. It receives the document. So what it does is also reduce bit of complexity of translations to Korean language. So all the certificates, handling of the NTS, that is a government body, all those things will be taken care by an ASP. So less of a hustle from the business side, and it's kind of a translation layer in between where a lot of things it streamlines or checks before it is sent to the NTS. So this is one kind of an hybrid model for Korea. So again, we saw this for UAE. It's more of a flexible kind of a model where they're also very flexible. They have two variations of sending the documents. It's also mostly direct business to customer with the authorities just receiving the copy. It's not fully mandated yet. So I don't know the latest regulations, but still it's waiting mandate to be finalized from the authorities what needs to be done there. So all would have their own version of XML format. Those XML formats would be passed on to the web services. There will be certificates in place for BTP and other requirement which are for the government bodies. So for sending, for receiving, in fact. So this is kind of architecture for e-document. We will have more granular architecture. I think one more diagram which should cover the whole process. I believe they have, yeah, this one. So if we try to break down the process, right, I've taken a Belgium example to break down the process, how it would work. So here, again, the creation of the document would remain at the source. You would create the document, let's say an invoice, and BT gets triggered automatically. There is no user action needed. Invoice is automatically created. You can view this invoice in the BTP layer, document cockpit, and then you have the option to send the invoice or review it once it is sent. So I've also mentioned the approximate timings that is generally acceptable for any business scenario there. So all these things, whether you trigger a sending from the source document, so this should get created, and then user action is required when you submit the document. That's what I think answers the question also, whether we can stop that document for sending. So there is a user action required where in a document cockpit transaction, so you can select the documents and validate processing. So once you have sent it, when sending is requested, the status would be shown as sending requested. There is where all the DRC cloud application would be seen.
Yeah. So somebody has to manually sort of like select that these are the invoices that has to be sent out to the authorities. I'm just talking generic, okay, not talking specific to Belgium here. Like let's say we pull 10 documents, okay. So out of those 10 documents, somebody has to review those 10 documents and do a manual activity to push it to the next level, or we can schedule a batch which can basically pull all the documents in document and push it further in the workflow, in the process.
Both are possible. So first is when you need somebody like a billing clerk or somebody who is responsible, who would not like to just send it as is. They want to review, check whether things are in place, and then take an action. So that's where
the limitation of the amount, the below 10,000.
Yeah, I was about to say that. Let's say now the second question is, if both the options are available, what I was trying to say, do we have some let's say one of the invoice we basically found out, and we found out that okay, there is an issue with one particular invoice out of 10. So can we put up a hold or a block on that particular invoice so that doesn't get pushed even accidentally through a batch process or something?
Yes, in your business system you can, or also it's possible to delete from a document cockpit and then again regenerate, or you retrigger those things. So I think from a document cockpit, it should be possible to even delete if you don't need some invoices due to XYZ reason. But bad job, if you have scheduled it at a particular time with a particular status, let's say all the invoices that are e-documents that are created needs to be picked, then it will automatically pick them.
But we can somebody can select an e-document manually and put up a hold on that particular document so that it doesn't get pulled up for the next process in the processing. Like, can you change the status of an e-document to a hold or something so that it doesn't get pulled up for the process?
At least if you have this requirement, so in the process manager, maybe you can add one more layer of check that once the document is created, until I have a status verified, let's say, it shouldn't be picked. So those kind of scenarios, you can have it in your process manager, apart from what standard scenarios already been provided. So you can have
this is like delivered. This is delivered, or this is we have to do customization for this one?
No, process manager is delivered standard.
Like adding this new status.
It's just like a body enhancement. So hook methods are there. You just need to add another status, let's say verified, and it would handle that.
Okay, so and then when you go to e-cockpit, you can change the status from verified to, let's say, on hold, so that only the verified status e-docs get pulled in for further processing, and the hold one will remain there.
Correct. You can mention it in the batch job while you schedule what is the picking mechanism. So it will ignore those things.
And now coming to Krishna's question, let's say any invoice which is less than $10,000, I just want that particular invoice to directly flow through automatically to authorities. Okay, but anything which is more than $10,000, I want to put up a hold that it should not go further unless somebody basically manually release it, like, or the change the status to verified. So that one we can also do it through body, correct? The hook method that you talked about.
Custom, yes. Any custom things that you want to put in, there are a lot of baddies provided. These baddies are even the validation for the Korea. They have very stringent validation on this business. What we call it as BTs, right? Business transaction names and IDs. So they have a very different kind of IDs validation there. So if the validation is not followed, it's little different from standard. So they have a very specific use case of, we'll walk through it. There is all controlled by body. So body is validating whether it's as per the standard they want. So all these things are controlled by your body extensions. So very much possible with your individual scenarios.
Okay, perfect.
These are not standard scenarios or filtered scenarios. This would be again business to business use case, how confident you are for sending.
But this extensibility option is inherent to the product, correct? I mean, it will not be considered as a
standard one.
Because see, the reason that I'm saying is from a Moody standpoint, we have a very high, what do you say? We don't have the tolerance to actually customize the core application that much unless it is clean core certified. Okay, if SAP gives us an option to do any customization through the clean core framework, then only we can basically do those particular customization, or it can be like a standalone program. But we cannot like implicitly touch any business process given by SAP and customize the heck out of it. We can't do that.
It is all, that's why it's all implicit enhancements or bodies which can be implemented as per your need.
Okay, good to do that. Thank you.
Okay.
Quick time check. We are at 2:40. Do we want to continue or break and then continue? Adri, for agenda, have we covered everything or are we behind?
Yes, we have covered. So implementations and node part, I have shared the details and we are actually above agenda. So I plan to walk through the note implementation TCI, but I think the basis team would look into the document and they can do that themselves. It's a very straightforward document. So we do not need a complete explanation of each TCI and etc. So I've already shared the document. I think
there is only one TCI note that's implemented. The other ones we already did. You're talking about the note 354530.
Correct.
Yeah, that one to be implemented.
Yeah. One question on your previous slide. From e-invoicing perspective, there are 4 clients that the one before actually. I'm talking about the countries. One is the Italy, Belgium, UAE, and Korea. Those are listed as the 4 examples or otherwise also. Is it because from a product readiness perspective or the regulation wise?
No, it's the training perspective. It's customized for this training requirement.
Okay.
Readiness is very long. So if you see
I gave that requirement, Krishna. I gave that requirement because Korea and Saudi, for obvious reasons, because these are the 2 countries that we have to implement DRC. There's a hard requirement. And then Belgium and Italy for the next wave, because Belgium, as of now, we are basically doing like a custom solution. As soon as we implement DRC, we basically have to move that custom solution to DRC for Belgium. Yes. And Italy, because we are spending so much money with client, it is better that we move that business process also to DRC. So
this is all
even from a landscape perspective, if you think about it, like it basically gives you the entire universe of problems. Like Belgium will cover people. Saudi, again, Middle East, a good example to actually have. Plus Korea, you have ASP plus local language, and then Italy follows a different structure altogether. So like this combination. Yeah, exactly. Like if you know, at least from my perspective, I'm sure you are the expert. You can basically let me know. But I think from my perspective, I think if we know these 4 countries, I think we can solve for any country across the board.
Actually, what you said is right. But I think, for example, let's say US doesn't have much of a requirement for e-invoicing, so to speak. They're way far away from it. Italy is probably far ahead. I would say Mexico is another example, which are actually they're much more from a regulation or the compliance perspective. Mexico is far ahead. I think Brazil will probably come into play. US is very less. I mean, unless you talk about statutory reporting, that is a different aspect. But these are a good geography. You picked up the right ones. I don't know how India fits into this. India and Mexico.
Brazil is another unique one, actually. That is a unique tax system.
I think Brazil, I didn't pick for the reason because I think Brazil regime is going to change for next couple of years. Unless it is stabilized, I don't want to actually get into the piece. Okay.
Exactly.
Yeah.
The
I think as of now,
and other stuffs are quite coming in. So a lot of regulations for Brazil are changing now.
So for next 2-3 years, Brazil is going to evolve. And Go ahead.
Sorry. Yeah, go ahead.
Yeah, so I was saying that because their regulations are getting changed that often, and we do not have like a very big entity. We don't have a very big presence in Brazil that we basically report out of. So it's a very small sort of like entity that we basically report on, and they are actually, as of now, they are doing a manual process. That's why I didn't touch Brazil. But yeah, I think eventually we'll probably touch Brazil and sort of like move further. But then again, we'll probably have like few more trainings around that specific topic for Brazil.
Yeah. And what about India?
India, we don't bill much. Till last year, we didn't had any billing entity in India. Till last year we implemented RMS. So RMS was the only first entity that we started billing out. That's why we didn't had any e-invoicing requirement. Otherwise, it was just from vendor perspective. When we acquired RMS, then only we started billing out of that particular piece. So I think we just want to utilize the existing vendors. Again, we also have to prioritize in terms of things that is coming up in our plate. So as of now, I have not heard much. I think I'm just slipping it under the rug. But as soon as the tax team get wind of the technology that we're implementing at DRC, I'm sure they're going to start knocking on our door and ask us to implement DRC for India as well. So, but again, probably like a phase 2 of this particular project. Next year, we'll probably look at implementing India as well.
Yeah, good. It makes sense then. Actually, I was just wondering why those countries. So we asked for it. Okay, that's good.
Yeah. We asked for it, and that's the priority list that we currently are working through in that order of implementation.
Okay, yeah. Overall, it is good. That's why good information actually, and like you said, it's a good discussion too. Actually, you covered a lot of ground.
Yeah.
Good job.
Sure. Then we'll meet. Thank you so much.
Sure. Yeah. Thank you.